you look at the three biggest cloud vendors, that's the Amazon Web Services, Microsoft, and then Google, Microsoft has actually given out a number and say, we have this AI revenue coming in. And a lot of that is coming in from all of us using ChatGPT subscriptions and running queries through that. Google and Amazon don't have that luxury. And their workloads are going to come from companies developing AI applications and running it. So that will take time. That will take several years to build up, because that, unlike, you can't go from 0 to 100 million consumers overnight in the enterprise world. It takes time. And I think that's the big delta between the three cloud providers right now. So for Amazon, that growth rate to go up, they need a lot more enterprise or corporate AI applications.
Anurag, thanks so much. Appreciate it. Anurag Rana, technology analyst for Bloomberg Intelligence. Here's the question for you, Alex. Will you, be honest now, will you watch the Super Bowl Sunday?
Yes, because my husband does.
Okay.
And my daughter likes commercials.
Okay.
So the two of them I can't. Whether or not I'm paying attention is an entirely different story. Maybe I'll finish my book on dragons, TBD.
Well, when my kids were young, I would have to go to a separate room and watch, because none of my kids are into sports. Their mother's not into sports. So even my daughter would come in halftime for the ads.
I see. Wow, no, I just get shunned to the other room. There's that. All right, for our listeners in the U.S., here's a reminder. You can listen to us via satellite radio on Sirius XM, channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM, channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now. Happy Friday.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday, everybody. We made it to the end of the week. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We have a great second hour lined up for you. We're going to focus in on the markets and dissect that jobs and UMich inflation data as well. Plus, it's munis. It's Friday. We're going to figure out how to manage munis and what we're going to see with tax exemption or not from the Trump administration. Plus, Laura Davison is Bloomberg News political editor, and we'll talk about potentially President Trump taking aim at private equity's favorite tax perk. This was a surprise and could be potentially huge. We'll break that down. And Michael Levy is CEO of Crow Holdings. We'll join with him on the state of commercial real estate. So lots of stuff to get through. And of course, we're going to look forward to the Super Bowl. But in the meantime, let's get you caught up on all the business headlines that you need to know. And for that, we go to Charlie Pellet.
All right. Thank you very much, Alex Steele. Here's what's going on. The Dow, the S&P, NASDAQ, all declining. Jobs Friday. We've got the S&P close to session lows right now, with the S&P down 38, 6,044 where we stand, down by about 0.6%. Dow Industrials down 287 on the Dow right now. That is a drop of just about 0.6%, while the NASDAQ Composite Index is declining 188 points, a drop now of 1%. The 10-year, 4.50%, with the 2-year, 4.27%. Spot gold up $20 the ounce, 28.76, up 0.7%. And West Texas Intermediate crude up 0.3%, 70.80 for a barrel of WTI. Consumer sentiment fell to a 7-month low in early February due to increased short-term inflation expectations relating to tariff concerns. Reaction to the data from Joanne Shu, Director of Surveys of Consumers at the University of Michigan, who was a guest right here on Bloomberg Intelligence.
So it came in a little bit weaker. It declined from last month, but it was actually a very pervasive drop. We saw it across all demographic groups. Republicans, independents, Democrats alike all declined from last month. And very much so, this is a worry about inflation coming back in the year ahead.
Joanne Shu, Director of Surveys of Consumers at the University of Michigan, interviewed right here on Bloomberg Intelligence. It is a down day for Amazon after earnings. Amazon shares now declining by 3.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so very much. We appreciate that. Let's get you more on some of the individual stocks on the move. For that, we go to Norma Linda, Bloomberg Equities reporter. Lots to get through. The macro clearly dominated by jobs and the UMISH, but individually, there's some stocks that are doing interesting stuff.
There are definitely some stocks moving this morning, but of course that headline that we just saw from Trump has really been weighing on markets, that Trump plans to issue reciprocal tariffs as early as Friday. So I'm really seeing a lot of these groups falling this morning, but I wanted to take a look at Amazon. That's really been the big name this morning, and this is after the shares are falling on constraints in its cloud ARM area. Apparently, it gave an outlook that was weaker than expected, and they're warning investors that it could face capacity constraints in its cloud computing division. Of course, we're really just keeping an eye on Amazon and a lot of the other information technologies as people have been having concerns about CapEx spending, and that's also been a conversation here for Amazon.
What else? What else you got?
Also looking at Take-Two Interactive. So this is a company, they focus on different things like Grand Theft Auto, a lot of those games that people like to play, but shares...
people like to play.
People, not me.
That was very indicative.
Those people, I'm kidding. But shares are surging for their best day since 2018, and they're hitting their highest intraday level in 4 years. And this is after the company reiterated its full-year net bookings guidance, but it also reiterated its plan to launch the highly anticipated Grand Theft Auto 6.
Can't wait for that.
Wait,
Are you going to be? You're going to be playing?
No,
exactly.
No, but didn't this take like 20 years to get? Did we?
I mean, people have been waiting for quite a while.
Not my number 3 and number 4 offspring. They play that.
Okay.
Now, the good news is that they play it together. One's in Los Angeles, one's in San Francisco.
That's
but it's a way
nice.
for them to bond.
I was going to say, great bonding opportunity.
Yes.
Well, also, they highlighted the performance of NBA 2K in the third quarter. And essentially, the management is just reaffirming the launch window. And this should all ease concerns. Matthew Koss at Morgan Stanley calls the last quarter a slam dunk, saying that it was a surprise breakout success.
All right. Good stuff.
Anything else?
I mean, I also am keeping an eye on Expedia. Of
Yes.
course, this is one of the stocks I'm keeping an eye on as well. I don't really use this as much as I used to in the past, but we see that a lot of people apparently are. They posted better than expected gross bookings in the final months of last year. And this is really just a reflection of resilient demand for travel during the winter holiday season.
All right, Nora, thanks a lot. Really appreciate Norma Linda joining us. Bloomberg Equities reporter, been very busy for a few weeks, I got to say. All right, now in just 2 weeks as Treasury Secretary, Scott Bessent has seen plenty of turbulence involving Elon Musk's Department of Government Efficiency. In an in-depth interview with Bloomberg's Saleha Mohsin, Secretary Bessent spoke about the Department of Government Efficiency team, saying that they're not tinkering with any Treasury or IRS payment systems and that they are doing important work.
These are Treasury employees. It is 2 Treasury employees, one of whom I personally interviewed in his final round. There is no tinkering with the system. They are on read-only. They are looking. They can make no changes. It is an operational program to suggest improvement. So we make 1.3 billion payments a year, and this is 2 employees who are working with a group of long-standing employees.
The letter that the Treasury Department sent earlier this week talked about how the team currently does not have access to change the system. Have they at any point this year had the ability to make changes?
Absolutely not. This is no different than you would have at a private company. And by the way, the ability to change the system sits over at the Federal Reserve. So it doesn't even lie in this building. So they could make suggestions on how to change the system, but we don't even run the system.
And if they ask for, if they request the ability to change the system, would you grant that?
No, again, they have no ability to change the system. I have no ability to grant that change. That they can make suggestions, then it would go to the Federal Reserve, and just like any large ERP system, there would be tests, there would be this, there would be that, and then the Fed will determine whether these changes are robust or not.
As the Secretary of Treasury, you also oversee the IRS. Do you know what kind of access the team has to IRS data or individual taxpayer data?
Well, I'm glad you asked that too, because look, the IRS, the privacy issue is one of the biggest issues. And over the past 4 years, we've seen a lot of leaks out of there. The IRS systems are quite poor. When I started in college in 1980, I learned the program in COBOL. I think there are 12 different systems at the IRS that still run on COBOL. But as of now, there is no engagement at the IRS.
And if they request that access, would you sign off on that request?
They haven't, so we'll take that when it comes to it. I think there is a lot to do there, but the president was elected with a big agenda, and to the extent that getting the IRS in better shape is part of that, sure. Because look, with the IRS, what am I concerned about? I am concerned about collections, I'm concerned about privacy, and I'm concerned that the system is robust.
You were listening to Scott Bessent, Treasury Secretary, being interviewed by Bloomberg's Saleha Mohsen yesterday, talking about all aspects of things, the long end of the curve, as well as Doge and the access that Elon Musk has. All right, back to the market and what we're seeing right now. We saw the jobs number come in a little bit of a disappointment, but then we had revisions higher. So the idea was that relatively neutral for the jobs world. Average hourly earnings, though, beating expectations. And then we got UMich at around 10, and that really jolted markets as well, falling to the lowest in 7 months. Also, the inflation expectation for 1 year rose 100 basis points. It was a very big jump. We wanted to get more into all of this and sort of encapsulate what is happening within the jobs market. Kate Duchesne is CEO of RGP, joining us. What was your biggest takeaway?
Well, I think this jobs report was really a mixed bag. We saw some numbers moving lower, as you said, but also others getting revised higher. So I think it's fairly neutral given the pressures from the LA wildfires and some of the frigid weather that we've all endured in January across the country. So we have to just keep watching what's happening in the couple of months to come. So,
Kate, I guess one of the big issues is what this might mean just from an overall labor market. But my takeaway would be, I've got a market that seems at 4.1%. It feels kind of fully employed. I've got wages that are rising faster than inflation. Is that what you see when you talk to your clients out there in terms of their view of the labor market?
Yeah, I would still say this is a really strong labor market. I think we have seen in our client base employees staying put. So as companies now are starting to increase some of their transformation projects again, they're turning to other labor sources like outside talent to supplement the teams that exist within their environments.
What are the biggest outside risks right now? Like the impact of tariffs, for example, the unknowns that we think are coming. How does it transmit into the jobs market?
Right. Sorry about that. Unknowns make everyone nervous, and that can be a dampening effect on the labor market. But there's also tremendous pent-up demand in terms of innovation, technology transformation, digital transformation that's happening in our client base. There's a push around cost cutting and supply chain optimization. Those pressures in a business don't go away. So we have some countervailing, I would say, pressures happening in the marketplace that we see in our client base. I would say on the average, we are cautiously optimistic that the environment for labor continues to improve throughout 2025. But there are uncertainties related to Trump's trade policies and immigration policies and how they all play out. And what the timing is will certainly impact what is the ultimate outcome.
Kate, yeah, you mentioned immigration, and as this administration begins to perhaps implement some changes, what kind of impact do you think that could have if there's, in fact, lower immigration, maybe even forced deportations? How do you think that will be felt within the labor market?
Well, it'll certainly impact certain sectors of the labor market and certain industries. You know, our business is primarily professional services, so we are looking at professional and business services, talent pools, and those, especially in this hybrid environment, can often be delivered remotely. And we can tap into labor pools that are global in nature. But things like retail or construction or healthcare workers that have to be on site, I think some of these immigration policies will create supply and demand problems and put more pressure there.
What about DOGE? We just heard Scott Besson talking about DOGE. If we cut a boatload of government workers, doesn't that just lead to so much supply in the labor market and just really tick that unemployment rate higher?
Well, it depends on the skill sets that are coming out of that environment. So we need to learn a lot more before I think we decide what the impact will be. You know, typically about 6% of federal workers retire or resign in a typical year. It's looking like that could be much, much higher given the activities that we're listening to around DOGE right now. But it's really going to depend on what are the skill sets coming into the marketplace, and are they the kind of skill sets that private industry is looking for to decide what impact might come.
An old topic, but one I like revisiting, is the whole hybrid work thing. Are you seeing any trends evolving here, or is it kind of set in stone, hybrid 3-4 days? Is that kind of the new normal now?
We really believe it is, and that's supported by a recent Gallup poll that said hybrid has really landed in the economy here. And we see that to be true in our client service. I'd say the only industries where that maybe is less true is in financial services, which tends to want people on site. We saw that with the JP Morgan announcement last month. And healthcare certainly has been more on site than others. But otherwise, you know, we think about 75% of our clients are solidly in the hybrid camp.
You have like 20 years of experience working with C-suites and helping them to manage transformation and initiatives. So what's your best guess on what happens with DEI?
So thank you. I mean, we've certainly all been reading lots of headlines about what's happening around DE&I. I think what's getting lost is that businesses can deliver the best results for their customers or clients when they can attract the smartest and innovative talent from a wide range of backgrounds and experiences. And that's what we focus on. It's really about what are the skill sets and perspectives you need for the best problem solving. And fostering an environment where employees can do their best work is how businesses will compete and win. And that's what we focus on. It's really about problem solving and getting different perspectives.
Is AI do you think is a net positive for employment or net negative? A lot of folks saying, gee, it may take some jobs away from individuals, but then others say, no, it's just simply going to improve their, potential. How do you think about it?
Yeah, I am more of an optimist that AI is going to bring more productivity, and I actually think more engagement in the workforce. That, however, requires that people be willing to upskill and I think reskill a little bit. Certainly, there are jobs that are very task-oriented and repetitive task-oriented that could be very disrupted by AI. But you know, moving into more business analytics, project management, technology skills, coding skills. I mean, as long as workers are willing to engage in some skill set acquisition, I think by and large we need AI to play a role as the digital worker, or we will not achieve the productivity goals that our economy needs.
Kate, we really appreciate it. I don't envy how difficult this time must be for you or your clients. Kate Duchesne, CEO of RGP, joining us from California. All right, coming up, we are going to continue the conversation, but it's Friday, so that means
Municipals.
There you go. Eric Kazatsky, Bloomberg Intelligence Senior Municipal Strategist, will be joining us. I even sent out another article this week being like, right, that tax exemption, that's really going to heat up. What do we do?
Yeah, there you're getting engaged.
Particularly if we're going to lay off a lot of government workers, what does that mean? What happens to schools? Anyway, so now I'm into that. Also, Laura Davison is Bloomberg News political editor. She'll join us on Trump taking aim at the carried interest trade on private equity. This keeps resurfacing like every few years, and every time we say how bad it would be for private equity, and then it kind of goes nowhere fast. So we'll get the real deal on that. You are listening to Bloomberg Intelligence on Bloomberg Radio and YouTube. I'm Alex Steele with Paul Sweeney. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks lower across the board. We are, however, on track for a winning week on the S&P 500 index. But right now, stocks are extending losses after a Reuters report that President Trump told Republicans he planned to announce reciprocal levies as early as today. The S&P down 29, drop there of 0.5%. The Dow down 180 now, down 0.4, and NASDAQ is lower by 168, a decline of 0.9%. 10-year at 4.49%, the 2-year 4.27%. Gold up $15 the ounce, 28.71, up 0.5%. And West Texas Intermediate crude at 70.80 a barrel, up 20 cents now, higher by about 0.3%. Expedia shares are surging 18.2% after posting better than expected gross bookings in the final months of 2024, reflecting resilient demand for travel during the winter holiday season. Again, Expedia up by 18.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellets, and that is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, Focus on Munis is brought to you today by BAM Mutual. BAM Mutual insures municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit BAMBonds.com.
BAM?
There you go.
Did you
BAM
expect
Bond.
me to do that there? Oh, okay, okay.
That's all right.
Okay.
They've kind of changed the copy. It
Yeah, they
doesn't-
have.
doesn't
It's
flow
confusing.
as well. But I'll tell you, Eric Kazaski, he's still here, senior municipal strategist for Bloomberg Intelligence. Hey, Eric, let's talk about the municipal bond market here. I'm looking at the Bloomberg Municipal Bond Total Return Index, up about 1.07% so far this year. What's the expectation in the muni bond market this year?
I mean, the expectation is that we're at least going to try and earn the carry on the index, which is about 4%, 4.2%. That would be a good year, sort of given all the unknowns that are coming down the pike, right? And the biggest one is going to be what's going on with extensions of the Tax Cuts and Jobs Act and how that's going to impact the muni market.
And what do you think?
You know what? We're in the camp, and this is slightly different than other people on the street, that we think that's pretty going to almost benign impact to our market. Look, there's some areas that could see an impact, the higher ed, healthcare space. They could sort of impact that 501c3 status or the ability of these, large IVs with huge endowments to borrow in the tax-exempt market. But on the margin, I think that's going to really sort of be the extent of it. Look, everybody can agree that state and locals borrowing at lower rates is a huge benefit that everyone can get behind.
So I guess with those kind of, unknowns here, who's kind of the marginal buyer of a municipal bond these days?
I mean, it's still going to be those high tax buyers, those people in the 35, 37% brackets, because they're getting the most bang for the buck. Right now, let's say New York 10-year bond is right around 3%. Highest tax rate there, you're going to double that. You're getting 6% tax-free, right? And that income stream that's coming into you is really what they're getting at. And with yields higher, they're getting that income stream at a cheaper level, which is always what they want to see.
Help me understand how reducing federal funding for different agencies and where government workers taking buyouts, how can that trickle down to the muni market?
You know what? I think it's a knock-on effect, right? No doubt that a lot of money that came in through the pandemic and that stimulus that was distributed to state and local governments was used for hiring. We see that a lot on the school district level. We can point to Chicago Board of Ed as a perfect example, right? In the last several years, their staffing has increased over 20%, but at the same time, enrollment is down almost 28%. So there's really a mismatch there. So could they take a cue from federal government and say, look, now's the time to sort of tighten our belt and see where we can sort of trim some headcount? I think that really could be the impact we could see in our market.
Eric, what's the expectation for new issuance this year?
Yeah, I mean, I was just on a panel the other day, and I think everybody was sort of on board with the fact that given what's going on with Tax Cuts and Jobs Act uncertainty, it's still anticipated to be a pretty strong year. So let's call it close to $500 billion in issuance, which would be pretty strong. If there is some area of the exemption that comes under fire or really a threat to repeal it, you could see that number pop higher, certainly.
What other interesting issuance have you noticed in light of all the volatility?
Yeah, I mean, there's two interesting issues that are on the calendar coming up. One is for Kentucky Power, which, given the issues that we've seen with public power credit in general coming off of the LA fires, it'll be interesting to see how that prices. And another one is for a senior living home out in Manhattan Beach. Now, while it wasn't directly impacted by the fires, it is a California credit. It is an area of the muni space, that high yield senior living, that really has seen spreads overly tight, I would say, over the last year. So it'll be interesting to watch that and see how that is received by the market as well.
So what's the expectation here, I guess, just for municipal bonds in terms of performance vis-a-vis Treasury? Because I noticed they're actually outperforming Treasuries a little bit year to date.
they're actually underperforming treasuries.
Oh, underperforming. Yes, yeah, by 35 basis points. Yep.
Exactly. So, look, our expectation coming into the year that munis were going to outperform, and that was really based on the Fed being a little bit more active than it has been. In times of easing cycles, munis do tend to outperform, meaning that muni treasury ratios decline at a quicker pace. If the Fed becomes active again, we think that is certainly what's going to happen. But we think down the stretch in the next few months, munis will have the opportunity to outperform versus treasuries, especially as we head into the summer when there's a lot of cash coming back to investors and they're going to want to put it back to work.
All right, Eric Kozaski, thank you so much. We appreciate that. Eric Kozaski, Senior Municipal Strategist for Bloomberg Intelligence, talking to us about the municipal bond market. I'll tell you a story that really kind of got my attention and kind of surprised me a little bit, given the presence of private equity senior executives within the Trump orbit. Trump takes aim at private equity's favorite tax perk again. Laura Davison joins us, Bloomberg News political editor. Laura, talk to us about this potential change that President Trump may consider and its impact on some of these big private equity folks.
Yeah, so the carried interest tax break, which is basically a provision of the tax code that lets hedge fund managers, private equity fund managers, venture capitalists pay lower rates on some of their income. Instead of paying those normal income rates that are close to 40%, they can pay somewhere closer to 20%. So it's a big deal in these industries, and it's the kind of thing that is always on the chopping block. Both Republicans and Democrats have signaled that this is something they want to get rid of out of the tax code. It's the kind of politically speaking. Say, hey, look at these wealthy people. We're going to take this tax break away and give tax breaks to the masses. But time and time again, Trump talked about this in 2016. Democrats talked about it in 2022. It has never managed to get erased from the books. So that is something that the private equity lobby, after this was mentioned at the White House yesterday, that this was something that the president had his eye on. They are already kicking into gear to save this tax break.
Right. So what's the ask? Like, why would Trump even put that out there? What's he trying to get from it?
So the thing here that Republicans are really struggling with is how to pay for their tax cuts more broadly. They have somewhere close to $11 trillion worth of tax cut ideas and only have maybe a couple $100 billion worth of ideas on how to pay for them. So they're starting to go through the couch cushions and figure out, okay, can we use the tariffs for this? What are some other tax breaks that we can use to kind of offset this really big sweeping tax plan they have? The problem is when it comes to carried interest, and this is one of the reasons it has never actually been eliminated from the tax code, is it only raises a very small amount, about $13 billion. That's in tax terms, in federal tax terms, a very small amount. So it doesn't actually go very far when you're talking about a bill that might cost somewhere between $5 trillion to $11 trillion. $13 billion is really just a very small rounding error.
Exactly. It's like that's not going to move the needle. I mean, that's like toilet paper.
And
right?
I can't help but think about the image of, I guess, the first Donald Trump presidency when he convened a bunch of executives sitting right next to President Trump was Steve Schwartzman, arguably the biggest private equity beneficiary of these tax treatment. Is he getting any pushback, or what type of pushback is he getting from a lot of folks I would characterize in his inner circle, the Mar-a-Lago crowd?
There's a lot of people sort of within his administration and within that sort of group of core donors, who very much have benefited, or their companies have benefited from this tax break. This was really a surprise when this came out yesterday. White House Press Secretary Carolyn Leavitt was reading off a list of tax priorities, and these are things that we heard on the campaign trail, things like no taxes on tips, no taxes on overtime, reducing taxes for companies that make products within the U.S. But just stuck in there was this carried interest thing, as well as also a call for eliminating special tax breaks that billionaire sports team owners get to claim. They didn't specify on what that are, but you can tell that the White House is starting to kind of throw out, okay, we need to at least come up with some ideas on, what sort of the give and take is on this tax bill. Though as soon as you announce, hey, here's the tax cut we want to eliminate, or here are the taxes you want to increase, you start to see both the lobbying set as well as sort of the business folks in the president's inner circle start to react immediately.
Just real quick, red headline crossing the Bloomberg terminal. Ackman says Pershing Square has 30.3 million shares in Uber. The shares of Uber are trading higher. We'll have more reporting on that coming up.
So, Laura, just before we let you go, if this is probably not going to happen, and if we can kind of look past it, what are the other key things that may actually happen that could really move the needle here?
So this is really what Republicans are fighting amongst themselves with. The things that they're looking at are putting the tariffs in the bill. What this means is that the president would control it. It would be Congress's purview to both enact them and then pull them away, which means that tariffs would be a lot longer lasting. That would go, somewhat of the way to paying for this bill, but there's a lot of other things. They're talking about deep spending cuts right now as a way to pay for the tax cuts. But after that, they really don't have a lot of ideas, which pretty much indicates no matter what they do on this bill, there will be some increase, perhaps a significant increase to the deficit.
Hey, Laura, just since the inauguration, there's just been a whirlwind of activity coming out of the Trump administration, whether it's executive orders, press conferences, and it appears just to a lot of people that there is little to no resistance from Democrats. What's the talk within D.C. about what Democrats are doing strategically here to face this new Trump administration? Are they laying low, waiting for their time? Or is there no one that's really equipped to go up against this administration?
There's a real deep divide on Democrats on what to do about Trump. Trump is really playing this flood the zone strategy where there's, a bazillion things that he's announcing and doing each day. And there's a group of Democrats that say, look, we should be attacking and responding, and we should be flooding the zone to sort of counter his messaging. And another group that says, look, we really want to, and Hakeem Jeffries, the House Democratic leader, has said, look, we want to pick our spots. We want to, react when it matters and not waste a lot of bandwidth and energy getting upset about every single little thing that's crossing. This is a debate that's playing out in real time, and you just don't have folks, unified against a strategy, and it's really getting lost in the noise.
In general, though, is Wall Street still happy with Trump presidency? And I say that just because when you hear everyone coming back from Davos, and you talk to anyone in the hedge fund industry, for example, like the vibe is just euphoric, or at least it was about a week and a half ago. Is that still the case?
I think it really depends on what happens with tariffs. We saw a little bit of market reaction earlier this week. Then Trump ultimately delayed those Mexico and Canada tariffs for another month. But that deadline is quickly approaching. Trump has also talked about tariffs on the EU, and he's also campaigned on this idea of a universal tariff of as high as 20%. Obviously, these tax cut debates are happening at the same time. Wall Street really loves that, but they're really not excited about tariffs. So what ends up happening with the combination of those two things will really be the key decider for how markets end up feeling about this presidency.
Laura Davison, thank you so much. We appreciate it. Laura Davison, she's a political editor for Bloomberg News. She is based in Washington, D.C., getting the latest here on some of these issues, tariffs. Reportedly, there may be some more tariff information coming along shortly, but we will certainly stay on top of that. Markets are trading off today on some of the economic news of the day. Well, Live Golf is closing in on more places for its star golfers at the world's most premier competitions, paving the way for unification between the Breakaway League and the U.S. and European tours. Earlier, Live Golf CEO Scott O'Neill joined Bloomberg TV anchor Jumana Bersecci. They discussed the PGA, revenue, and plans for growth. Let's take a listen.
We have been for, of, and about growing the game of golf. And there's so many new and exciting leaders. If you look at Derek Sprague at PGA of America and Mark Darbin at the R&A, and I'm new at Live, and I know the PGA is looking for a new executive as well to work alongside Jay. And I think that provides an opportunity for us all to take a step back, appreciate where we are in this moment of time, and move forward. The fact that the leader of the free world, the President of the United States, thinks that golf is this important that he can engage makes us really happy and validates how important this game is. And I still believe it's one of life's great teachers, and just as important as we could possibly find today in bringing this game together. So any news that brings us closer to that, I think is really welcome news for all the golf fans around the world.
Have you spoken to the president directly yourself?
I have not, no. In a few weeks, we'll be in Miami playing at Doral, which is a Trump course. And I imagine he'll make an appearance there. But, in these first 30 days, I've had the time of my life, getting to know these incredible stars like Brooks Koepka and Dustin Johnson and Bryson DeChambeau. We have the best players from around the world. That's been an experience. Getting ready for this incredible event season, kicking off in Riyadh, and getting our feet under us and planning for the future.
Now, I know you're not in position to give us the contours of the deal, but is it your expectation that if a deal does come to fruition, that it would allow for more coexistence between Live players and the PGA Tour? Is it your expectation that ultimately LIV players could participate in the PGA Tour without being penalized?
You know, our focus right now is on making sure we take the best players in the world to the best locations in the world. It's a deal and a construct that we've all been working on for some time, and we're all focused on the same goals and objectives, and that is to grow this game, put as many of the greatest players on the biggest stages of the world. And while I'd love to walk chapter and verse into the deal, I will tell you that anything that's good for this game is good for LIV, and we're thrilled that there's progress being made.
Yeah. One recent development earlier this week, the U.S. Open became the first major to actually create an exemption for LIV golf players. Do you expect other majors to follow suit as well?
You know, very appreciative of Mike Wan and his leadership at the USGA. We heard today from Mark Darbin, who runs the R&A and the Open Championship, and they will be following suit. And at least the early conversations with Derek Sprague at the PGA of America are very positive as well. So it seems as if the headwinds are becoming tailwinds. There seems to be this incredible arc of momentum, and whether that's, you know, our deal with Fox in the US or our deal with ITV in the UK, or all the incredible partners we've had. Madden is our title partner here, and Bahri just came on board as well, and Roshan. So we're starting to get momentum in terms of the entire business. So it's quite expected in terms of where we're heading.
Yeah, you mentioned some of those broadcasting arrangements, and obviously the PIF have put in billions into LIV. Revenues, a big question mark from here onwards. To what extent do you think those types of broadcasting deals, those arrangements, are all going to be additive to your future revenue flow?
You know, I'm here for one reason, and that's because spending time with His Excellency Yasser Al-Rumayyan is a man of vision and passion for the game of golf. He's got an incredible love and understanding of what's to come. And the investment to put this many incredible star players together will result in an incredible business. And so the foundational years have been built, and now we're ready to grow this business. So it's a really special moment in time right now.
All right, that was LIV Golf CEO Scott O'Neill speaking with Bloomberg TV anchor Jumana Persechi, talking about LIV Golf and ultimately about the reunification of the golf world with the LIV Tour and the PGA Tour. It is long overdue. Now, there's reporting I saw yesterday from LIV Golf and the PGA Tour that they've asked President Trump to get involved and mediate something. So maybe that will be a catalyst, so we'll stay on top of that because I'm a fan of the business of golf and the game of golf. All right, right now, let's get a reset here. We'll go to Charlie Pellet for a Bloomberg Business Flash.
Hi, thank you very much, Paul Sweeney, and here's what's going on. We've got losses across the board, wrapping up the trading week with a down day for the Dow, the S&P, NASDAQ 100 index, and yes, the Russell 2000 index as well. Right to the numbers, S&P down 41, 6,042, where we stand right now, down 0.7%. Dow Industrials down 260. Down 0.6%. The NASDAQ Composite Index down 218, a decline of 1.1%. We've got the 10-year at 4.47% with the 2-year 4.26%. Gold little changed, up $7 the ounce, 28.64, up just about 0.2%. West Texas Intermediate crude up 0.2, 70.74 a barrel. Equities extended losses after a Reuters report said President Trump told Republicans he planned to announce reciprocal levies as early as today. The U.S. Labor Department reports job growth moderated in January, and that casts some doubt on the economic outlook for 2025. And with that story, here's Bloomberg's Vinny Del Giudice.
Non-farm payrolls eked out a gain of 143,000, less than November and December. Healthcare and retailing propped up January's modest increase. The oil and gas industry lost jobs, as did the auto industry, but January's unemployment rate edged lower to 4%. Today's report includes annual revisions, and they revealed less vigor in the labor market. Vinny Del Giudice, Bloomberg Radio.
Sources tell Bloomberg Veritas Capital Fund Management is in talks to acquire Dun & Bradstreet, one of Wall Street's oldest data and analytics providers. Dun & Bradstreet down 7.2%. 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so very much. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. Also check us out on YouTube. One of the most interesting conversations over the last few years is what happens to real estate, in particular office commercial real estate. And then the question is, if the Fed's not going to be cutting as much as maybe we thought 8 months ago, where does that put real estate in general and the returns that we might see for this year? We love hitting it on this program. We're going to continue to do so with Michael Levy, CEO of Kroll Holdings. Kroll Holdings has about $33 billion in assets under management. Here's the pitch I get. It's always like, yeah, those, Class B and C office is bad, but we don't own any, and you definitely want to own that. We like senior housing, we like warehousing and AI. That's what I hear all the time.
Okay.
How do you fit into that?
Well, we have a different lens.
I like it.
I would agree that the Class A+ office, there's demand for leasing, but our focus has been on the multifamily sector, the apartment sector across the United States, the industrial sector across the United States, as well as a number of other specialty areas such as manufactured housing and student housing. We've stayed away from operationally intensive real estate, such as senior living, which is really an operating business like hotels. We've also, long before COVID, the office sector is highly volatile in terms of cash flows. You know, in an economic downturn, you're spending a lot of money trying to attract new tenants between the upfront tenant improvement cost and leasing commission costs. And so the volatilities of cash flows in even good office buildings is very high. We're looking for less capital-intensive assets over the long term and more stability and predictability in earnings generally. And that's our approach.
All right, given where we are today, what are some of the sectors that you guys favor right now? Yeah. Presumably it's not office.
Yeah. We're very focused at this moment in time. We're doing three things more than we're doing other things. One is industrial development. The supply peak has happened. Supply is beginning to fall off of a cliff. New starts have fallen off of a cliff, and we think over the next couple of years you're going to see very significant rental growth and pricing power because you've got sustained demand because of a good economic environment, onshoring, nearshoring, e-commerce. All of those fundamentals coupled with very low supply should result in a very strong rental growth environment 26, 27. The other area we're very focused on and have been for years is manufactured housing. One of 9 homes built in America is constructed in a factory and rolled out on a truck. There are
like prefab, basically?
Like a trailer.
That's what happened when I added an extension onto my house. That's what they did. They dug the hole, they manufactured it elsewhere, and then dropped it in.
Well, specifically, I mean homes that are moved on a truck and not built. They're trailer homes, so manufactured homes.
Ah, okay, so not at all what I said. Got it.
Not what you said. There are 43,000 of these communities in America. 4.3 million Americans live in this. It's the most affordable cost of housing in America. And supply is moving negative because every year very little is built, because people don't want to see these communities built in their environments, and many are demolished due to higher and better use, and so terrific demand-supply fundamentals. The working class in America is starved for places to live. This is a very important component of housing for working class Americans, and so our acquisition in that business. And then the third—
So you acquire there?
We acquire there. We do a little bit of development, which is very hard to do, but we acquire generally from mom and pops, and we improve and elevate these communities, and we found it to be incredibly attractive.
Interesting. How about multifamily? Is that a solution? Because first of all, I'm not sure how I know there's the narrative in the real estate business that we don't have enough housing.
Yeah.
I don't know how we got there, but is multifamily a way to address that?
Well, there's no doubt that multifamily is a critical component of housing for Americans. Where we have the gap in housing for Americans is, again, at the working class level, less than the average median income, and certain states and cities which are doing everything they can to restrict the new supply of housing. There are some markets where there's plenty of available housing. So it's a local or regional phenomenon, and of course apartments are a critical part of the solution.
How do you think liquidity is going to be in the real estate sector this year? Like, if rates stay around this level, they don't actually come down more, what happens?
Yeah. Well, first of all, the banks and the debt funds and the CMBS market are very healthy right now, very liquid, very available. Pricing is what pricing is, It's higher than it was, but the spreads are attractive relative to base rates, and banks and others are willing to lend. Financing is available, generally speaking, certainly relative to the past few years. On the equity side of the table, there's also a lot of committed equity to the overall real estate sector, so there is a fair amount of liquidity available, equity and debt. What we've been dealing with is a bid-ask spread and a pricing perspective. And so we're coming out of this 3-year period of time, and like any recovery, it takes time and it's choppy, but we are nonetheless seeing an improvement in the environment and a material improvement versus a year ago.
Are you based in Dallas?
I'm based in Dallas, correct. We're based in Dallas.
Is there any stopping the city of Dallas or the state of Texas? I mean, I've been down there a lot. I like it, but I mean, you guys are going like crazy down there.
I don't think if you sit in Dallas, you are clearly at the epicenter of growth in the United States. It is a sucking sound of commerce. Businesses from all over America are moving to the state. They're generally moving to the southeast and the southwest, but there are a number of fundamental benefits of Dallas. It is truly in the center of the country. It has amazing infrastructure for air, for train, for rail. There is land in every direction available for continued growth and development.
Landman.
So all of those elements, plus it has an environment, a culture that supports, and you look at it and might say, no, it's just the laws and the regulations today. No, it's the culture. Dallas was formed in 1871 by 2 railroads crossing. It has existed not because of beautiful topography or rivers or mountains. It has existed because it has attracted and welcomed people from a commercial perspective. And that culture remains alive in the city today. And that is in addition to all the other elements that I highlighted.
And it's a diversified economy. I mean, I used to just think about it, particularly Houston, your energy, but boy, it's so diversified.
No, I mean, even in Houston, like 10 years ago, it was like, but also we have this huge medical and hospital team now too, and then that's even diversified. So I guess that brings up the question real quick, regionally, where do you find the most interest?
Generally speaking, we're focusing more in the southeast and the southwest. Why? That's where people are moving to.
Right.
That's where corporations and people are moving to. If you want to make money in the real estate business, invest where people are moving to. And that's where we're generally focused. Not to say we don't have activities and operations in many other places, but that's the majority of our activities.
How long has this company been around?
77 years, started in 1948.
And where was it originally from, in the Dallas area?
It was a young man named Trammell Crow from East Texas. And
now it's all coming back.
He built a speculative industrial warehouse in Dallas that we still own today.
Nice.
And came from there.
Really good stuff. Really appreciate you coming on. Thank you so very much for joining us as I try and find where we are.
Now I know.
Goodness. Crow Holdings, Michael Levy joining us. He's the CEO there on the state of all things real estate and really where the movement flow is. All right, coming up, Super Bowl Sunday, Brian Egger, Bloomberg Intelligence Senior Gaming and Lodging Analyst, will be joining us. DraftKings CEO was just on Bloomberg Television saying that doesn't expect volatility in Super Bowl bets, but nevertheless, gaming and lodging analysts could be very busy over the weekend. This is Bloomberg Radio on this Friday. Taking a look at the markets. The markets are slipping just a bit. The NASDAQ is off by 1.3%, the lows of the session. This is Bloomberg.
listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
Happy Friday. Happy Super Bowl Eve. If we can go that way, why not? I'm Alex Steele alongside Paul Sweeney. So, of course, we know Super Bowl is Sunday. We're looking at snacks. We're looking at ads. We're looking at who's going to win, who's going to lose. Yeah, on the field, but also behind the scenes. Brian Egger is Bloomberg Intelligence Senior Gaming and Lodging Analyst, and he joins us now. This is the fun part of your job, right? This is when you pick winners and losers come Sunday. What are you watching?
Yeah, this is it. So we're watching a lot of things. We're watching the game itself. We've watched all along ad sales, apparel sales, food, beverage, snack sales. So there's a lot going on in terms of the business impact of the Super Bowl.
So talk to us about the gambling aspect of this, the gaming aspect. I mean, I grew up where, you know, you'd go to your OTB or you'd go out to Vegas, you go down to AC and you go to the sports book, and that's kind of how you did your sports betting. That is so yesterday, isn't it? Talk to us about mobile gaming and what it means.
Absolutely. Yeah, radically different since 2018, now that we have pretty much national sports betting with mobile apps in 32 states. You know, we're kind of looking at potential for 1.2 to 1.5 billion in gaming revenue. And, you know, I think you're right. We have a close game, a lot of star power, a rematch of what we had 2 years ago with the Chiefs and the Eagles, 2.5-point spread, which means it's going to be tight and closely contested. So that's all really good for betting. We do have a view that the comps in terms of the level of growth of wagering versus, say, last year might be a little tougher. We've only got 2 new mobile states since last year. You know, last year we had the Super Bowl in Vegas, so sportsbooks there probably don't see the kind of action they did, let's say, last year. But overall, it should be a very solid performance.
Individually, when we're taking a look at, say, different sectors, you guys wrote a great note out with Jen Bartashis, for example. She heads up consumer staples for Bloomberg Intelligence. What does the Super Bowl mean for, like, Walmart and Target and places where you straight up buy groceries?
So, according to Jen, Walmart and Kroger should big beneficiaries on the snacks front. You know, you've got, I think by her estimate, sales up 10%, maybe a 9% increase in snack sales. And with something like 126 million potential views of the game, a lot of people at home watching, that's very bullish for snack sales, as it is for the other sectors you probably read about, which are advertising, apparel, et cetera.
And from my old perspective, which is covering the media aspect of this, and I remember when a spot went for $1 million, and now they're up to close to 8 million. Geetha
8 minutes for what? For 30 minutes? For 30 seconds?
30-second spot. Wow. That's when CBS had it. It was a big deal, and it was a big deal for CBS. And that was like 20 years ago or 15 years ago. Geetha Ranganathan, who covers all the media companies, including the Fox network, she's got a great little stat. $750 million in about 4 hours. Oh my God. That's pretty big money there, Brian.
Yeah, no, it's big. I mean, we've got essentially for the advertising inventory, according to Geetha, we've got sold out inventory, as you said, at 8 million spots, record sales of those advertising spots, and with potentially a Taylor Swift appearance, the president at the game. You know, I think you've got a lot of star power associated with this event. So she is looking for that $750 million revenue number for Fox.
I wonder if there's a prop bet on who gets more airtime, President Trump or Taylor Swift?
There 100% has to be a bet on that. I mean, weren't there bets last time on, like, will Taylor Swift stand or sit or like something? I mean, there was all that crazy kind of stuff, right?
There are prop bets, not necessarily in DraftKings or FanDuel, but I think they're out there if you want to find those fairly arcane prop bets.
But to your point, that's actually kind of fun. When you take a look at that $750 million in 4 hours, though, how much is Fox having to pay for this?
Yeah.
Do we know?
Yeah,
a lot.
That's Paul's old bailiwick, so he probably knows.
But do they make money off of this, or what is this?
As far back as CBS 20 years ago, when they got the football back, when they lost it, they say, we will make $1 of profit. And that's basically what Wall Street has come down to. We don't look for you to make real profits on your sports business, but what it does is it just helps you promote the rest of all your properties. So pay attention during the game. How many other Fox properties get promoted during the sportscast? Yeah. That's where the real value is. Hey, Brian, just remind us, the sports books in these big casinos in Vegas and everywhere else, they're not really that important to the actual casino, is it?
For a brick and mortar casino, you're probably looking at about maybe 3% of that casino's gaming revenue coming from sports books. But on the mobile side, and again, mobile betting in states that have both, like Jersey, New York, which is 90% plus of the action, that's where you see more significant betting. I think historically, as you may know, Paul, that sports betting has been more important as a traffic driver. You get people into the books, they bet at the tables.
Yep.
The mobile dimension of this is a fairly significant aspect of it.
I love just going to the sports books. You go there, you get these big comfy chairs, nurse a couple of beers, watch like 27 different games on different screens. Before you know it, 2 hours.
Yeah,
Shot.
I would much rather play Texas Hold'em in the casino. So you do that, and I'll play Texas Hold'em, and then we'll see how much money I lost. All right, Brian, thanks a lot. We really appreciate it. It's a great note
Thank
out,
you.
you guys, from Bloomberg Intelligence. It really is Brian, but everyone else, too. You got Geetha, Mary Ross Gilbert, who covers some of the apparel guys, Jen Bartachis, who covers snacks. Super in-depth in terms of winners and losers when it comes to Sunday, and the companies to watch and the brands to watch. Really fun. Highly recommend Brian Edgar. He is Bloomberg Intelligence Senior Gaming and Lodging Analyst. Okay.
But there's no like party involved in the Steele household. Like you're not going to a party, having a party.
No.
It's not,
What?
it's not
No,
an event.
it's not in my DNA.
Right.
I think because my parents were not big sports people, so I didn't. My dad loved golf. Like that was his thing.
Okay.
But he didn't like care if I didn't love golf.
Okay.
It was just more like he was just gonna watch golf till the end of time.
All right, very good, very good.
Good luck with the snowstorm.
Yes, we'll fingers crossed we'll get out Sunday and we'll be skiing in the slopes of Colorado. Champagne powder, that's all I'll say.
Love it. Love it. All right, that wraps it up for me and Paul on this Friday. Coming up, Balance of Power with Kaylee Lyons is next after this global news update. As you look at a market that continues to slide to the downside as yields continue to move higher after the solid jobs data and the surprise upside for inflation in UMich.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. Confrontation at the Department of Education.
Get out of the way. We pay for your...
Democrats show up to demand a meeting at the department that President Trump has vowed he'll eliminate. California Congressman Mark Takano.
The department was created through an act of Congress, and it cannot be abolished except through an act of Congress. But the executive branch is not coming to Congress to work with us.
President Trump is eyeing funding for NGOs, non-governmental organizations.
In a statement, the president says the U.S. government has provided significant taxpayer dollars to NGOs, and many are engaged in actions that, quote, actively undermine the security, prosperity, and safety of the American people. The statement goes on to direct heads of agencies to review that funding. Quote, the head of agency shall align future funding decisions with the interests of the United States and with the goals and priorities of my administration. Linda Kenyon, CBS News, the White House.
A federal judge in Boston today will consider a request from several states to block President Trump's executive order ending birthright citizenship for the children of parents who are in the U.S. illegally. Israeli Prime Minister Benjamin Netanyahu met today with House Speaker Mike Johnson.
I was deeply moved by the reception that we got, the substantive things that we discussed, making sure that Iran never gets a nuclear weapon, and also making sure that Hamas is destroyed.
Hamas today identified 3 Gaza hostages it plans to release tomorrow. Netanyahu called the International Criminal Court scandalous and corrupt as he welcomed a Trump order slapping sanctions on the court. At least 2 deaths are blamed on a tornado that hit an area 60 miles northwest of Knoxville, Tennessee. In New York, the discovery of 7 bird flu cases has temporarily closed bird markets in the New York City area. Governor Kathy Hochul.
For a week-long period, no poultry can be delivered to those live bird markets. Each uninfected market must sell down all inventory, undergo thorough cleaning and disinfection, and then remain closed for at least 5 days.
The government reports 143,000 jobs were added by employers last month. That's less than experts predicted. But investment strategist Chris Heisey says it could be a Goldilocks number.
Economists will say not too hot, not too cold. Gives a little bit of a window for those people who think the Fed will be happy.
The CDC reports a second spike in flu cases this winter. Most states reporting high or very high activity. Wall Street right now, the Dow is down 298 points. This is CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
A downside job surprise. Welcome to the Friday edition of Balance of Power. I'm Kaylee Lyons, and of course, it's not just any Friday. It's a Jobs Friday, and we're going to dig into the details of the labor market data with Bloomberg's Michael McKee in just a moment. Plus, we'll get the latest from Congress as the House Speaker now says the details of a plan forward on the budget are going to have to wait until the end of the weekend or perhaps even Monday. Bloomberg's Wendy Benjaminson will join me with more, as will our political panel today, Jeannie Shanzano and Lester Munson, who will also weigh in on the meeting taking place right now at the White House between President Trump and the Prime Minister of Japan. Plus, we have an important conversation still ahead this hour. Bloomberg's Julie Fine sitting down with the governor of Texas, Greg Abbott. It's a lot to get to, but we got to begin with a check on these Jobs Day markets because the economic data is making some things move around, and Charlie Pellet is tracking it all for us. Hey, Charlie.
Thank you very much, Kaylee Lyons. Indeed, reverberations on Wall Street with the Dow, the S&P, and NASDAQ not just lower, but right now looking at the lows of the session. Right to the numbers, S&P down 50. We've got that index at 6,032, down 0.8%. Dow Industrials down 318, down 0.7%. The NASDAQ Composite Index down 268, lower by 1.4%. The 10-year at 4.49%, the 2-year 4.27%. Gold, little change, up 0.1%, $28.60 the ounce. And West Texas Intermediate crude now up 0.2%, $70.75 a barrel. Equities extended losses after a Reuters report said President Trump has told Republicans he plans to announce reciprocal levies as early as today. Meanwhile, non-farm payrolls increased by 143,000 last month after a revised 307,000 gain in December. We'll have more with our Michael McKee coming up in a moment, but administration reaction to the jobs report from Kevin Hassett, director of the White House National Economic Council.
And so I say that what we learned with all these downward revisions is that the Biden economy, the Biden jobs market, was way worse than markets thought. And that's sort of consistent with the rest of our views that their policies were unwise, and there's a lot of cleaning up to do. And I think that if you look at ISM that just came out, that market participants believe that President Trump is going to be able to turn things around. And with these big downward revisions, we can see that there's actually a lot of work to do.
Kevin Hassett of the National Economic Council, and yes, more with Kevin coming up shortly right here on Balance of Power. Amazon, after earnings, down now by 4.2%, all part of a broader sell-off. Tech leading the way lower. NASDAQ down 1.2%. To put that in context, S&P down 0.7, the Dow down 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington once again. Here she is, Kaylee Lyons.
In New York, running us through the market reaction to the jobs data today. Thank you so much. And just to reiterate, to summarize it at a very high level, and we'll get into the granularity and nuance with Michael McKee in just a minute, you have cooler than expected on the headline figure non-farm payrolls. You have a lower than expected unemployment rate of 4%, and you got hotter than expected wage growth. Then there's the revisions to contend with, which add a complicating factor. And a complicating political factor is that this was a split jobs report. Part of it reflective of President Biden's final days in office, part of it reflective of the first days in office for President Donald Trump. This Trump White House, though, making it clear that any weakness in the data should be attributed to what was going on in the Biden era. And we did hear from the White House directly here on Bloomberg today, where my colleagues Anne-Marie Hordern and Jonathan Barrow got to speak with Kevin Hassett, the director of the National Economic Council. And this is how their conversation began.
If you look at the people who've been, in the office I am in now, like even Lael Brainerd before, I'm kind of humbled to be there. I also want to say thanks for leading off with Mike McKee. I've been watching him do jobs stuff for like 20 years, and I always want to hear what he has to say. And sure, he had a couple things in there that I hadn't noticed in the release, and so that's great too to be back. I would say that the big headline for me is something that you guys haven't talked about yet, but I'd encourage you to, is that we've got this thing going on where the professionals at the BLS keep revising down the data. And so the headline for me when I'm looking at this is that it was the biggest downward revision. You know, the benchmark goes through last March, the biggest downward revision since 2009. And we're still sifting through the numbers, but, you know, it's really, really big. Could be as much as, if you go a little bit beyond the month, the last month, it could be as much as 1 million jobs fewer than we thought after this benchmark revision.
Kevin Hassett, clearly appreciative of my wonderful colleague, Michael McKee, our international economics and policy correspondent, who I am as well. And Mike reminded me that this survey for the jobs report for January actually was still taken when President Biden was in office. Just one of the insights that Mike will bring to us now here on Balance of Power. Mike, appreciate it very much. What did you pick out in this data that Kevin Hassett maybe hadn't had his eyes on yet?
Well, I'm not really sure, but there was a note from the BLS that the California fires and the bad weather in the U.S. during the month of January didn't affect the jobs numbers, although there were almost 600,000 people who weren't able to work because of bad weather. Now, that's seasonally not unusual, but it is a subtraction from job growth in theory. So there's a little bit of a weather impact there. Rest of it was fairly straightforward, and it is pretty good news for the Fed and for the Biden administration. Yes, job growth slowed, but job growth had been slowing, and this is not a bad number. A couple of years ago, this would have been, or before the pandemic, this would have been considered a strong hiring number. And as you mentioned, unemployment goes down, don't have a reason for it because it's due to the change in the revisions to the prior year's numbers. But average hourly earnings fairly strong. And I don't know if that's where Kevin picked it up, but we saw a little decline in hours worked, and that may have contributed to slightly higher average hourly earnings.
But just on the revisions, Mike, because plenty of people are calling attention to those, this White House included, what's exactly up with that?
Well, every year the Labor Department revises the jobs numbers for previous months. They look at the year from April 2 years ago to March of last year, and they incorporate new data that brings it, it's more accurate. It takes longer to get some of the data that they use, tax data and things like that. And this time we saw a little over 500,000 jobs taken away from that year period. Now, the thought was it could be as many as 800,000 or more. So that was a little bit better than anticipated. But this has happened before. They add or subtract jobs this month every year. So that's not unusual. And you go back to 2019, which was Donald Trump in office, and it was before the pandemic, and it was almost exactly the same number of jobs subtracted when they did the math. So it's a little bit of a glass house there for the White House.
Okay, so what about for the Fed then, Mike? If you look at the totality of this data, does this give you any clue as to whether or not you should take your hand off the pause button?
No, you just leave it there for the moment because the job growth had slowed some, and we're not seeing at the same time in other data big layoffs. The unemployment rate hasn't changed. It went down statistically, but it's still essentially the same thing, that it's below the natural rate, the neutral rate of employment. And wage growth is still strong enough to support consumer spending, even if there's a little bit of a statistical quirk in this month's number. So the Fed can look at it and say the economy's doing just fine at these levels of interest rates. Inflation isn't where we want it to be, so let's just sit.
Well, and obviously there was a conversation that took place about the Fed and monetary policy between our colleague Saleha Mohsin and the Treasury Secretary Scott Bessent yesterday, Mike, and his suggestion was he's not going to be weighing in on monetary policy, not really concerned with whether the Fed is going to be hiking or cutting, that the administration is going to use things like fiscal policy to try to bring rates down. To what extent is that actually achievable if the Fed is not lowering the Fed funds rate?
It's not going to be achievable unless in some way they manage to cut spending, and I don't think it's possible, enough that it would suggest to Wall Street that interest rates could come down, that the dollar could weaken some. At this point, that doesn't look at all likely, especially with tax cuts being the #1 item on their agenda, which would strengthen the economy and push interest rates higher. So I don't think that's very realistic. And if you believe, Scott Bessent is probably very sincere, and he probably will keep his promise not to say anything about the Fed. But if you believe his boss will stay quiet for 4 years, I got a bridge to sell you.
Well, speaking of his boss, Mike McKee, President Trump is meeting right now in the Oval Office with the Prime Minister of Japan, and we're getting a few headlines out in that regard. Trump specifically talking about the trade deficit with Japan, saying he wants to end it. And beyond that, he says he wants to get other countries also to equality with the U.S. in terms of deficits. If we balanced out the trade deficit with all of our trading partners, what would that mean economically? Is it possible?
I suppose it's technically possible, but it's not going to be happening. And if it did happen, what you would lose is the dollar's status as a reserve currency. You wouldn't have any reason to do that because everybody would be equal. If you're running if you have the world's reserve currency, you have to be willing, because of the demand for your currency, to run trade deficits because people have to get money from you to buy the things from the United States because the dollar is stronger. So there's a lot to this. And I think part of the problem is the president just likes to throw out these things without really understanding them. And they sort of float by and don't actually become policy.
And yet consumers take note of them anyway. When we look at the UMich sentiment numbers, Mike, hitting a 7-month low today on short-term inflation expectations, do we chalk that up to tariff worries?
Yes. Blame Donald Trump and his talk of tariffs, according to Joanne Shu. She's the surveys director at the University of Michigan, and she said that they got a lot of comments from people who said that they were worried that tariffs were going to hurt the economy and they were going to raise prices. And we saw that in the Michigan sentiment inflation expectations numbers, up to 4.3% this year. But the interesting thing about that is much of that was Democrats and independents. Republicans said this year inflation would be 0. Now, that's not going to happen either, but it just shows who's drinking the Kool-Aid and who's not.
Perfect way to end it here on the Politics Show, Balance of Power. Michael McKee, thank you very much indeed. Appreciate it. And we are getting fresh headlines around tariffs from President Trump as we speak. He's suggesting in a meeting with the Prime Minister of Japan that tariffs on Japan are an option. And also a piece of news that's now a red headline on the Bloomberg terminal. He says he'll announce reciprocal tariffs next week. I guess we'll see if that applies to everyone, what exactly those details are. We'll have much more on it ahead here on Balance of Power. So stick with us on Bloomberg Radio and on YouTube too.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks in the red. The Dow, the S&P, NASDAQ, all declining right now, with the S&P down 48 points on this Jobs Friday, down by about 0.8%. The Dow is down 323, down 0.7. NASDAQ right now down 258, a decline there of 1.2%. Your key takeaway at this hour, stocks are at the low of the day. 10-year at 4.48%, the 2-year 4.27%. Gold little changed, up under 0.1%, higher by $2 the ounce, $28.58, while West Texas Intermediate crude up 0.3%, $70.80 a barrel on WTI. As we have been reporting, President Trump says he plans to unveil reciprocal tariffs next week in a major escalation of his trade war with U.S. economic partners, and the president says he has not changed his mind on the U.S. Steel, Nippon Steel deal. Sources tell Bloomberg Nikola Corp is exploring a possible bankruptcy filing following a tumultuous period in which the electric truck maker has swung between stock market darling and a scandal-plagued enterprise. Shares of Nikola down now by 35%. And Tesla was the biggest loser among electric vehicle makers last month in Germany, where consumers snubbed Elon Musk's brand and bought more VW and BMW vehicles. Tesla shares down now by 1.6%. Recapping, the S&P down 48, down 0.8% for on-demand news 24 hours a day. Subscribe to Bloomberg News now, wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host. Here she is, Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Here in Washington, more specifically at the White House, an important meeting is underway in the Oval Office as President Donald Trump has his second foreign leader visiting the White House this week, the second visit so far his term. It's the Prime Minister of Japan, with a joint press conference between the two scheduled to take place in the next hour. But they're not waiting for that to make some news. At least the president is not, as he speaks to reporters with these two sitting down in the Oval. You can kind of pick your headline here. We're covering a lot of ground. The president saying he'll be talking to Vladimir Putin, talking about the war in Ukraine. He will be meeting with Chinese President Xi Jinping probably. And he's talking a lot about tariffs. He says auto tariffs are always on the table, that he will be announcing reciprocal tariffs next week. And again, as he is meeting with the Prime Minister of Japan, suggesting that tariffs on Japan are an option. But maybe this isn't all too surprising. The president has made his feelings on tariffs and on what he views as unfair trade relationships very clear. He said that he wants to actually get rid of the trade deficit with Japan, make all things equal. So obviously this is a lot to work through, and it's only just the beginning of the things we're focused on here in Washington today. So to help me work through all of it is Wendy Benjaminson, Bloomberg senior editor, who is here with me in our Washington, D.C. studio. So Wendy, perhaps it's not all too surprising that Donald Trump is once again talking about tariffs, given what we've experienced in the last several weeks. Reciprocal tariffs, not a new idea necessarily that he's introducing. He talked about this on the campaign trail. But how do we differentiate threat and negotiation versus likely to become reality here?
Well, that's a really, really good question, Kaylee. And, you know, he is very enthusiastic about talking about tariffs. He has yet to actually impose a lot of tariffs. As you know, we spent the weekend, watching him threaten to impose these very draconian tariffs on Mexico and Canada and China. The Chinese ones stayed in place. He's actually, making them a little tougher with these, with the de minimis exception for small packages from, fast fashion websites and things like that. But he then uses it as a negotiating tool to pull back. So who knows whether, he's delayed the tariffs on Mexico, he's delayed the tariffs on Canada, so he may threaten them again, and we'll just have to see whether they ever become reality. But I know that for the markets and for firms, this is causing tremendous chaos because they don't know. One day they think there's going to be tariffs, and the next they're not.
Well, and I could imagine if you're the new Japanese prime minister meeting face-to-face with the President Trump for the first time, and he says, yeah, I'm not ruling tariffs out on you either, that might color the conversation that they're going to have behind closed doors. Wendy, as we know, the Japanese prime minister had things he wanted to talk about, countering China, North Korea, Nippon Steel, maybe.
Exactly. Plus, he was very interested in having the same kind of relationship with Trump that his predecessor Shinzo Abe did. They were very close. They saw alike on many, many things. And so now, Ishaba is really hoping for that. But as you say, who knows what they're going to talk about? Trump also just now reiterated his opposition to Nippon Steel purchasing U.S. Steel. So we'll see at the news conference where you read out 6 headlines and he hasn't even had the news conference yet.
Exactly.
So that's at 1 o'clock.
Yeah, and I would point out the U.S. Steel CEO met with Donald Trump at the White House this week as well.
Right.
So I wonder how that informs his statement that he has not changed his mind about that deal. Okay, so obviously Donald Trump is busy as we speak. We'll be hearing more from him later. And this is just the beginning of what's on his agenda today.
Right.
Wendy, later on this afternoon, he'll be getting on Air Force One, going down to Mar-a-Lago, where he will dine with Senate Republicans.
Right.
Who have a very different idea of how his legislative strategy should be pursued. They want a 2-bill strategy. The House is still trying to get its act together on one. Is this going to be a matter of who convinces the president to put his foot down with the other side first?
Well, I'm expecting that Senator John Thune, the majority leader in the Senate, is really glad to be the last group that Trump is talking to, because as we know, Trump often goes with what the last advisor said.
Sure.
And so the House met with him earlier in the week and said, we want 1 bill. Senator John Thune and his party wants 2 bills, as you said. And so it could be that, after this weekend, Trump will come out and say, no, okay, I want 2 bills. He's kind of leaving it to them. There was this description in one of our stories on the terminal that, the House Republicans were there with a whiteboard in a room at the White House, and Trump kept coming in and out, sort of like a MAGA version of a West Wing episode, where they were trying to come up with cuts. And Trump told them what he wanted and then left the room, and they came back. But, still they're going to be working through the weekend to come up with something.
Well, and yeah, the Speaker of the House said end of weekend, maybe Monday, is when the actual details of this could be announced, even though last night when he emerged from the meeting at the White House, he was like, yep, we've got a framework. We could let you know the details as soon as tomorrow. Clearly, tomorrow is now upon us, and we don't know these things yet. It just speaks to the difficulty of wrangling the various factions of the Republican conference in the House. Specifically, Wendy. And if ultimately it's the 2-bill strategy that the Senate gets to pursue, that if the president blesses that, how hard will it be to get twice the votes you need in this House with a majority of 1, at least for the time being?
Exactly. And that's why it'll be very difficult, is the answer. And that's why Mike Johnson is very much into the 1-bill strategy, because he knows that if they do immigration and energy or tax cuts and save the other one for later in the year, the other one is going to be very, very difficult to pass. You don't know how much of this disruption and chaos will remain popular with the American people. We don't know, as the midterms then approach, this is the 1 year for governing. And as we get close to the end of the year, the midterms start for 2026. And there's a lot of politicking. And getting a second bill through will be very, very difficult. And I don't know what John Thune's strategy is there to try to do them in 2 bills, except in the Senate it is easier not to have a grand bill that people can filibuster and argue about for days, literally days on end.
Well, and obviously this is all making the assumption that it's only going to be Republicans that push this through. What role do Democrats play here, Wendy, especially if something like raising the debt ceiling or aid for California and the wildfires is embedded within this legislation?
Well, they can issue strongly worded letters, as they did today with the closure of the U.S. Agency for International Development. They are completely out of power right now. They do not have the votes to turn something around, and that's why there's this push for a reconciliation bill, which does not require 60 votes in the Senate.
Yeah.
It requires 51, and so they could lose a couple of Republicans even doing that, some of the real hardliners. But Democrats, unfortunately, right now, they just don't count.
Okay, well, that's one statement. Certainly they're out of power in Washington. You mentioned USAID, though, Wendy, and we did get a Truth Social post about Donald Trump from that today saying, close it down.
Right.
Well, can't be done without congressional authority, though, right? Or can it? Are they just testing the limits here to see if Congress steps up and says, wait, hold on a second, you do need us to do this?
Right. Well, it depends if you're asking a constitutional scholar or a Republican in Congress. A constitutional scholar would say no, that in the 1970s, when Nixon didn't want to spend the money Congress was appropriating, they passed a law saying, no, you have to. We have the power of the purse. This is how it works. And Trump is deciding to just ignore that law. He's been ignoring it in a lot of these shutdowns and the freeze on federal spending and the firing of government employees. He's just ignoring the fact that all that money comes from bills passed by Congress. And so If anyone sues on this, they may find that it is illegal. But House Republicans are basically, and I should say Senate Republicans, are basically just lying down and letting Trump take their power away from them because they are, at this point, still afraid of angering him. And the Democrats don't have enough votes to make a difference. They are suing. So we'll see if a judge steps in and decides this.
Yeah, we've seen judges step in already, delaying until Monday, for example, the deadline for federal employees to decide whether or not they're going to take buyout offers, stopping the birthright citizenship order, at least for now. As we consider the other players in this game, though, Wendy, Russ Vought, who was nominated to be the director of the Office of Management and Budget, was confirmed by the Senate.
Yes, he was.
Last night. He was an author of Project 2025. It's pretty clear how he feels about a lot of these issues we're talking about. What will he be able to do at OMB, regardless of whether or not Congress is participating?
Well, right. He can do a lot. It's a very good question because Congress appropriates the money, and then he's the guy who actually makes sure it gets where it's going. He's the budget director for the White House, not for Congress. So Congress passes laws that spend the money, and then now Russell Vought, the guy who wrote Project 2025 and said that federal employees should be I don't remember the exact word he used, but he really insulted them. They were horrible, and they should feel trauma, and they should feel all this pain and get out of the way. And Elon Musk seems to be spurring that along. So he is the guy who decides whether the money gets spent from the executive branch, and then we're back to the Nixon law and the Constitution and all of that.
Well, and then there's Elon Musk as well. That's a factor here in, I guess, decision-making at the executive branch level, at least for right now, to the extent to which, Wendy, he is gracing the cover of Time magazine
sitting behind
this week,
the Resolute
sitting
desk.
behind the Resolute desk in the Oval Office. I cannot imagine that the president is satisfied with that kind of imagery being presented.
That could help people who don't want Elon Musk to be busy as he is. That could begin to turn Donald Trump's opinion around. No one else has survived Donald Trump with this level of impunity to run around mucking up the government. I mean, Trump keeps saying he'll pull on the leash if he has to, but he hasn't found opportunity to pull on the leash yet. So we'll see whether that continues, or Trump may just really enjoy having the world's richest man flatter him and work for him. And that gives him a sense of, I can make Elon Musk do whatever I want Elon Musk to do, which would fit with his personality.
Well, and then there's also, of course, the other people who might face pressure to try to keep Elon Musk in check in some way, including the Treasury Secretary, Scott Bessent, who sat down for a wide-ranging conversation with our colleague Saleha Mohsen yesterday. She began by asking him about the access to the payment system that Treasury granted Musk and those working with him at Doge. He maintained they cannot control anything. They will not be granted the permission to do so necessarily. But to what extent is that actually the reality, as far as we understand it right now?
As far as we understand it, which, as you point out, is not complete, they do have read-only access. But that means they can read, and they can go tell Elon Musk, we're spending money on this, that, and the other thing, and we shouldn't. And then Musk can go to the Treasury Secretary, with whom he is perfectly aligned, as Bessent told Saleha yesterday, and then it could happen. So the fact that they can't actually push the button themselves doesn't ease people's discomfort at where some of these people are going. And you recall that Bessent described them as highly trained professionals and fully functioning adults. And these people are in their early 20s. And one of them was fired yesterday, even though Scott Bessent said he had vetted them. One of them was fired yesterday for incredibly racist posts on social media that I can't repeat here.
Yeah, that was an incredible development to see just literally hours after the Treasury Secretary had personally vouched for these people and said he vetted them.
Right, and one of the tweets was, I was racist before it was cool.
Yeah.
Which is odd.
Okay, so we'll leave that one there for a moment. There's obviously a lot more in depth that we could go with this, but this is one of those things that has Democrats incredibly angry. They are pushing for congressional oversight of Elon Musk and what Doge is doing. I spoke last night on the late edition of Balance of Power, Wendy, with the chair of the Oversight Committee, James Comer. Didn't seem to feel like there was a need to have Elon Musk testify before them or for that traditional oversight and accountability role to be played. His argument was that it's because Elon Musk is being transparent about everything that he is doing. Do we have full transparency, though, into what is happening with Doge, what information they have access, be it from the payment system or other things?
I mean, if you click refresh on X all the time, you will see it.
He did make that argument. He was like, he puts his thoughts out on Twitter all the time.
He does put his thoughts out, but they're not detailed plans. And not only did Comer, when you talk to him, not see the need to bring Musk in, they blocked an effort from Democrats to subpoena Musk to come and testify before Congress and simply say, here's what I'm doing with the money you already appropriated. That's all the Democrats wanted. And Comer and others blocked the subpoena. In fact, kind of ran together at the last minute at night to block a subpoena request from Musk. So he is acting, we don't know how he's acting, except when we watch him on X.
But we do know we can find him on the cover of Time.
That's right, we certainly can.
All right, Wendy Benjaminson, Bloomberg senior editor here in Washington, thank you so much. And I would just point out, as I began our conversation with Wendy, we did just get a lot of news from President Trump as he sits down in the Oval Office with the Prime Minister of Japan, including on tariffs as well as Nippon Steel. We are expecting we may see some taped playback of that conversation any minute now, and we'll be bringing that to you here on Balance of Power. In the meantime, though, while we wait for that, we have our political panel joining us today. Jeannie Shanzano is with me, Bloomberg Politics contributor and senior democracy fellow at the Center for the Study of the Presidency and Congress, alongside Lester Munson, BGR Group, head of the international practice there and Republican strategist. Lester, if we could just begin where I ended things with Wendy around this notion of Elon Musk, not just what he's doing at Doge and whether or not these things are popular, but also the fact that it is him sitting in the Oval Office, at least an image of it, behind the Resolute desk that is on the cover of Time magazine this week. How do you expect the president is going to receive that kind of image?
Kaylee, it's a great question. I think there's something going on here that we've seen before, which is, it's not uncommon to have kind of a bad boy associated with different presidential administrations, usually Republicans, someone who kind of draws all the ire perhaps away from the president and gives the president a little more flexibility to act. So I think there's, in a lot of ways, Mr. Musk is providing a useful tool here for the president to kind of draw some fire and attention and that kind of thing, while President Trump gets a little more flexibility to say, well, I approve of that, but not necessarily that, and that kind of thing. It's a interesting little dance they're doing on a very public stage.
Well, and speaking of the president, as I mentioned, we are getting some playback now of his meeting in the Oval Office with the Prime Minister of Japan. So Lester and Jeannie, sit tight. We'll be back with you in just a moment. Let's listen to the president's words.
I understand that the key point in this regard is to make that for mutually beneficial. That means that would benefit the development of the United States as well as the development of Japan. And I do hope that whatever measures and actions should meet this criteria, meaning that serving the interest of both countries. But as to specifics, I understand that we are going to have further discussion.
Correct.
Mr. President, are there any specific concessions that you will be asking for from Japan that you can share?
We'll be having. I think it'll be very easy for Japan. We have a fantastic relationship. I don't think we'll have any problem whatsoever. They want fairness also.
それはうまく進むと思います。日本は素晴らしいパートナーですし、彼らもことがスムーズに進むことを期待していると思います。これは双方にとってです。
Mr. President, do you have a reaction to the new Time magazine cover that has Elon Musk sitting behind your Resolute desk?
タイムマガジンにイーロン・マスクが大統領の机の後ろで座っている写真がありますけども、それに関するコメントは何かありますか?
Is Time magazine still in business? I didn't even know that.
まだタイムマガジンは廃刊じゃないんですか?
Elon is doing a great job. He's finding tremendous fraud and corruption and waste. You see it with the USAID, but you're going to see it even more so with other agencies. And other parts of government. He's got a staff that's fantastic. He's wanted to be able to do this for a long time, and everybody else knew it was existent, but I think never so much when you look at USAID. That's a fraud. The whole thing is a fraud. Very little being put to good use. Every single line that I look at in terms of events and transactions is either corrupt or ridiculous. And we're going to be doing that throughout government. And I think we're going to be very close to balancing budgets for the first time in many years. I think we're going to be very close to, in addition to monies coming in from tariffs, et cetera, et cetera. But he's doing a very good job. I'm very happy with it.
Will you put Elon Musk up on the podium for us to ask him some questions, Mr. President, at any point? Will you put Elon Musk up on the podium for us to ask him some questions?
Oh, sure. He's not shy. Elon's not shy.
Any further deliberations on Gaza, sir? The timetable for a takeover?
No deliberations. It's been very well received, where basically the United States would view it as a real estate transaction, where we'll be an investor in that part of the world. And no rush to do anything. We wouldn't need anybody there. It would be supplied and given to us by Israel. They'll watch it in terms of security. We're not talking about boots in the ground or anything, but I think the fact that we're there, that we have an investment there, I think would go a long way to creating peace. We don't want to see everybody move back and then move out in 10 years. This has been going on for 50 years, much more than that. We just want to see stability. That would be having us have that particular piece in that particular location, I think would show great stability and would lead to great stability in the area for very little money, very little price, and we wouldn't need soldiers at all. That will be taken care of by others. And the investments are taken care of by others also. So for no investment, I mean virtually no investment whatsoever, it would bring stability to the area, and others can invest in it later on. But we're in no rush on it. There's absolutely no rush.
President Trump, do you believe DeepSeek is a national security threat, and how do you plan to collaborate on AI initiatives?
On where?
DeepSeek, do you believe it's a national security threat?
No, I think it's happening. I mean, it's a technology that's happening. It's actually, I think we're going to benefit if it's correct what's going on now, that it'll be a lot less expensive. The AI we're talking about will be a lot less expensive than people originally thought. That's a good thing. I view that as a very good development, not a bad development.
Mr. President, on autos specifically, in your first term, you tried to tariff autos. Is that on the table still? Are you trying to do that in your second administration?
Auto tariff?
Auto tariff?
Oh, yeah, sure. That's on the table. That's always on the table. It's a very big deal. Because we have cases where we don't supply autos and other countries do, and we have to equalize it. We have to stabilize it and equalize it.
Will you have Vice President Vance meet with President Zelensky next week while he's in Europe?
I will probably be meeting with President Zelensky next week, and I will probably be talking to President Putin. I'd like to see that war end for one primary reason. They're killing so many people. You're losing millions of people on a battlefield. In this case, mostly the battlefield. You have 800,000 or 900,000 Russian soldiers are dead and very badly wounded, and the same thing with Ukraine. You have probably 700,000 with Ukraine. The numbers they gave are a little bit lower than that, but I believe those numbers aren't correct. I'd like to see it end just on a human basis. It's terrible what's going on. They have open fields with no protection. The only thing a bullet can hit is a human body, and the human body dies as soon as it gets hit. Now, I'd like to see that end. It's a ridiculous war. It would have never started if I were president. That war would have never started. Putin would not have started that war if I were president. And by the way, you wouldn't have had October 7th if I was president either. That mess would not have started. But no, I would very much like to help out. One of the things we're looking at with President Zelensky is having the security of their assets. They have assets underground, rare earth and other things, but primarily rare earth. And we want to have security. Really, we want security because, as you know, Europe is putting up much less money than us, NATO, Europe, call it whatever you want. And we're at probably 300 billion plus, and they're at probably, the real number is 100 billion. That's a lot of money, but it's 200 billion less than us, and there's an ocean in between. They need it more than us, so we're asking them to equalize and get even, but we're also asking President Zelensky for the security of, we're putting all this money up, and we're saying, where does it stop?
We've been listening to President Trump in the Oval Office as he meets with the Prime Minister of Japan, Shigeru Ishiba, and we'll have more analysis on that for you later on Balance of Power. In the meantime, though, we want to go live to Dallas, where Bloomberg's Julie Fine is sitting down for an important conversation with the governor of Texas, Greg Abbott.
Are you concerned this will affect the Texas economy?
Not really, and there's a reason for that, and that's because he had these tariff announcements during his first term as president, and it didn't really impact the Texas economy. Listen, the Texas economy is the most powerful economy in the United States, and we're able to withstand all types of challenges, and we're going to make our way through this. And so, to be honest, I'm not really concerned about it. Also, we've seen, as everybody observed, and that is sometimes these tariffs are used strategically to achieve certain purposes, like what happened with Mexico and Canada. And it worked out to the United States' advantage that certain border security measures were taken, especially by Mexico, as well as fentanyl issues concerning Canada. And so the United States is better now because of the use of tariffs and the ability to extract changes that are better for the country. And I have no doubt that'll be one of the goals that the president will pursue with regard to other potential tariffs.
And you met with the president this week, and border security, of course, the topic for you. You said that Texas would offer military bases, 4,200 beds for troops, as well as 4,000 jail cells. Now, border crossings are down in the state of Texas. What do you envision the long-term plan for the state when it comes to the border?
So, obviously under President Biden, Texas needed to take extraordinary steps because we had more than 11 million people across the border, more than during any presidency in the history of the United States of America. And as a result, we built 2 military bases on the border, one in Del Rio, one in Eagle Pass. And we're working with the Trump administration to provide them holding facilities, detention facilities such as jail and prison cells as they apprehend people and prepare them for deportation. Bottom line, Texas is going to be all in to assist the Trump administration. But we have seen illegal crossings decrease to a trickle. Here's what we need to see. We need to see the ongoing success by the Trump administration at reducing illegal immigration in a sustainable way, and that will help Texas calibrate what our next actions will be. Now, obviously, it should not be incumbent upon Texas taxpayers or any state taxpayers to have to foot that bill. And as a result, that's why I've been working with members of Congress, and I'll be back next week to talk to them even more about ensuring that Texas is going to be able to have the resources we need and a reimbursement for some of the costs that we incurred to better secure the border.
I want to turn to the Texas economy. The newly formed Texas Stock Exchange just submitted for approval. Now, if companies dual list on the New York Stock Exchange and the Texas Stock Exchange, or the Texas Stock Exchange and NASDAQ, how might that be different from other dual listings?
So it may be similar to what's happened historically concerning dual listings, but here I think we will see a trend change in stock markets, the way that we've seen a trend change in the economy. Now, let's go back to the year 2000, for example. New York City was still the home of finance at that time, and other states were larger than Texas economically. These days, Texas is has the most powerful economy in the United States, as well as we have more people moving here than any other state. We have the fastest growing financial sector in the United States. Add to that the way you could subdivide the United States into quadrants. If you look at the southeastern quadrant, from Texas up to Oklahoma, over to the East Coast, down to Florida, then back over to Texas, that quadrant represents almost all of the positive GDP growth in the United States of America. And as a result, there will be a kinship in that region for businesses that will be far more likely to be aligned with the stock exchange that we have in Texas than stock exchanges up in New York. One last thing about that, and that is we need to ensure access to capital for oil and gas businesses that are unique and important to just not only the state of Texas, but also to this entire region. We think that with the growing financial expertise that's going to be taking place in Dallas, in Texas, as well as the growing economy in the southeastern quadrant, we're going to see a lot of businesses that are interested in locating here for access to capital. And know this, you've already seen this, Julie, with regard to incorporation. You've seen SpaceX, for example, move their incorporation from Delaware to Texas. We're seeing a lot of that take place across the board with businesses because they see Texas as a more business-friendly state, especially in the aftermath of a new law that was signed 2 years ago, creating business courts in the state of Texas that now rival and some businesses feel are superior to the business courts in Delaware.
President Trump has a very broad education agenda. So do you. 33 states have some form of school choice. If it happens in Texas, it would be the biggest. You've tried to get this done for several sessions. This time around, do you think Texas will have school choice at the end of the session?
I really do, and there's several reasons for it. One is, as you know, but others may not, I campaigned this last election cycle to ensure that we elect to the Texas House representatives who are going to support school choice. And we were successful in that effort, and now should have more than enough votes in the Texas House to get it passed. It's already passed the Texas Senate. It passed the Texas Senate just this week. And so we are on a pathway where it should get passed. And know this, as you pointed out, school choice in one form or another exists in more than 30 states. And in those 30 states, there's not been a collapsing of the public school system. Instead, the public school system gets more competitive, while at the very same time giving parents the ability to choose the school that's best for their child.
You were with the president earlier this week as he signed some executive orders. Along the lines of the Texas legislature, you have signed one as well regarding DEI. That would be in public offices. There is also a ban on DEI in public universities. Are you hearing any feedback? What are companies saying to you about this?
I think companies are tired of having dictates imposed on them, such as DEI mandates, because their real goal is to be a success for their shareholders. And the way they can do that is to increase their return on investment without having to invest in social programs that may not be beneficial to the bottom line. And so I will tell you, I've heard nothing negative about it. I've heard many positive things about it. We need to get back to core value sets. But understand this also, and that is what DEI programs often promote is discrimination. It's a violation of the U.S. Constitution, of the Texas Constitution, of the civil rights laws to discriminate on the basis of race. What many DEI programs do, they promote one race while not advancing others, and that violates the Constitution of Texas and federal laws.
In the very short time I have left with you, you touched on this earlier. Elon Musk, arguably Texas' most well-known resident. What do you think of his influence right now?
Listen, he's doing to the government sector what he's really needed in our country, is to shrink government. The government has grown too large. And one way to save money for taxpayers and make government more efficient is to do exactly what Elon is doing. And I think most Americans are very proud of what he's accomplishing.
Governor Abbott, see you in Austin soon. Thanks so much for your time.
Thank you.
All right, that was Bloomberg's Julie Fine, our Texas bureau chief, sitting down for a conversation with the governor of Texas, Greg Abbott, covering a lot of ground, immigration naturally, but also ending the conversation on Elon Musk. And it's on that note I want to turn back to our political panel today. Jeannie Shanzano is with me alongside Lester Munson. Lester, I already gave you a bite at the Elon Musk apple, so I'll let Jeannie about Elon. Jeannie, the work he already has underway, the fact that he's gracing the cover of Time magazine this week, as he is just as influential a voice at this point as any elected official, from the governor to the president.
He absolutely is. And first of all, I think it's great to hear from the governor. You know, we don't get enough in terms of state and local coverage and what's going on. So that is truly important. And his comments about Elon Musk toward the end were fascinating, because the governor is absolutely right. We can cut waste. We can cut the amount of spending at the federal level. There's no question there. There is a lot to do in that arena. But that is not the question. The question here is one of state capture. That is a private individual who is not accountable, who is not elected like Elon Musk, who is going in on the weekends and who is doing things arguably in his own interest at the federal level. That is a deep concern to Americans. So the governor is right. Cut the waste, cut the size, cut the scope, but you've got to do so constitutionally and legally, and it should be done by people who are accountable in a transparent way to the American people.
So, Lester, on that note, we have just about a minute here, but when we consider the legal question and the accountability question, is it Congress that ultimately will hold Elon Musk accountable, or does it have to be the courts, given the way things are going?
Well, politically, it'll be Congress, of course. Legally, I suspect it would be the court system. So there's a couple of different apertures here, and I think a lot of people are kind of imagining horrible things happening and not focused on what's actually going on. And if Elon Musk and his Doge folks are really just looking at the books and looking for waste, fraud, and abuse, it seems to me that's a pretty good idea. And sometimes you need an outside perspective to really find it. So long as they're not crossing any of these red lines, I think that's an entirely appropriate activity. And politically, people can judge whether there's a conflict of interest for Mr. Musk or not. He does seem to bring a kind of a unique sensibility to these things, and perhaps that can be useful to taxpayers.
All right, Lester Munson and Jeannie Sheehan Zaino, my political panel today. Thank you both so much. They will be back for more in the next hour of Balance of Power as we continue to work through the news we have gotten from President Trump, who is meeting at the White House right now with the Japanese Prime Minister Shigeru Ishiba. The president saying that he hasn't changed his mind on the U.S. Steel, Nippon Steel deal. He's also planning on announcing reciprocal tariffs next week, not ruling out tariffs on Japan either. We're going to have more with the former ambassador to Japan, Rahm Emanuel, in the next hour, the second hour of Balance of Power, which is about to begin right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Welcome to Balance of Power on Bloomberg TV and radio. I'm Kaylee Lyons, live in Washington, where we have our eye on the White House at this hour as President Donald Trump sits down with Japanese Prime Minister Shigeru Ishiba. They're set to hold a joint press conference shortly, scheduled to be this hour, although Donald Trump answered extensive questions from reporters in the Oval Office earlier, so we'll see how on time things are running. But it's an important meeting, and we'll have more insight on it with the former U.S. ambassador to Japan, Rahm Emanuel, this hour. We also, of course, have to talk about the jobs report. It is Jobs Day, after all, with cooler than expected figures on non-farm payrolls. We'll get into it with a former economist at the Labor Department, now with the Heritage Foundation. Diana Furchgott-Roth will be here, as will our political panel, Jeannie Sheehan Zaino and Lester Munson, today as we consider the path forward in Congress for budget reconciliation. It's a lot to get to, but let's begin, as always, with Charlie Pellet, who has a look at these Jobs Day markets for us from New York. Hey, Charlie.
Hi, thank you very much, Kayla Lyons. Stocks lower across the board. The Dow, the S&P, NASDAQ 100 index, and the Russell 2000 index, all in the red right now, with the S&P trading close to session lows, down 43 on the S&P, 6,040 right now. That is a drop of 0.7%. We've got the Dow down 330, down 0.7%, and NASDAQ is lower by 225 points, down by 1.1%. The Russell 2000 index of small cap shares also down 1.1%. The 10-year, 4.49%. The 2-year, 4.27%. Spot gold, little changed, up 0.1%. $28.60 the ounce, and West Texas Intermediate crude up 0.4%, $70.92 a barrel. Stocks are falling as President Trump says he will announce reciprocal levies next week. A slide in consumer sentiment amid worries over inflation also weighed on trading. And of course, earlier in the session, 8:30 a.m. Wall Street time, we got mixed jobs numbers showing a moderating but healthy labor market. Briefly, Bill Ackman says his hedge fund, Pershing Square Capital Management, now owns 30.3 million shares of Uber, citing the strength of the rideshare company's management and saying the stock is undervalued. Uber up now by 9.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host, here she is, Kaylee Lines.
All right, Charlie Pellet in New York with the market reaction to the jobs data. Thank you so much. And I'll just reiterate those figures for everyone here on Bloomberg TV and radio. When we look at non-farm payrolls growth in January, just 143,000, lower than the 175,000 estimate, but an unemployment rate lower than the estimate as well, at 4%. Then you have wage growth, which was hotter than expected on both a month-on-month and year-on-year basis. Those figures at 0.5% and 4.1% on average hourly earnings growth, respectively. So when you put it all together, there is some sign of a little bit of weakness here, and the new White House, the Trump administration, is casting blame on the old one. We spoke with Kevin Hassett, the director of the National Economic Council, here on Bloomberg about the data earlier today.
The Biden jobs market was way worse than markets thought, and that's sort of consistent with the rest of our views that their policies were unwise, and there's a lot of cleaning up to do. And I think that if you look at ISM that just came out, that market participants believe that President Trump is going to be able to turn things around, and with these big downward revisions, we can see that there's actually a lot of work to do.
We want to get more insight now into the work ahead and just frankly where we are with a former chief economist at the Department of Labor. Diana Furchtgott-Roth is with me here in our Washington, D.C. studio. She's now director of the Center for Energy, Climate, and Environment at the Heritage Foundation. Diana, thank you so much for being here on Jobs Day.
It's great to be with you, Kaylee.
Well, it's lovely to have you. As the White House is framing these figures of a worse Biden economy than previously thought, but what we're talking about here is an unemployment rate of 4%, which is still historically pretty low. Is that too how you see this data?
Well, I think that there's two surveys. There's the unemployment rate, then there's the establishment data, which is jobs created. And the unemployment rate, those data have just been revised because they revised the population totals. But what's really important to focus on is the establishment data and the jobs created. There was 143,000 jobs created, which is why the market is looking down on this. But it's not so much the number of jobs, it's that they were all in low-paying or government sectors. So if you look at manufacturing, tiny gains, losses in oil, losses in mining and logging, in motor vehicles and parts, when other countries want to buy our oil. And you have President Trump who says he wants to sweep away regulations, have lower electricity prices, have faster permitting to allow those high-paying jobs to come back to the United States. And that's what's important, that American workers have the upward mobility they need through these higher wage jobs.
Well, when we consider, though, some of these lower wage jobs and different sectors of the labor market in which migrant labor specifically is relied on, how are you thinking through the deportation effort that is underway and has been accelerating in the last few weeks, and how ultimately that's going to trickle into the labor market?
Well, we see that the labor force participation rate is still lower than it was during before the pandemic. It has not regained its pre-pandemic levels. So there are plenty of American workers who want to do many of these high-wage manufacturing jobs that we're focusing on. The point is to bring these high-wage jobs back to America. There are plenty of American workers who want to do them.
So there won't be any labor shortages with those roles that American workers may not be so eager to fill.
There's paths for legal migration, and President Trump has always said he wants legal migrants. So if there are job openings, if there are gaps in the labor force, there's plenty of scope to bring in workers who want to come legally, who have been waiting for years and years, Kaylee, to come into the country. Why shouldn't those workers come and do those jobs that are needed rather than people who just walk across the border?
Well, something else President Trump wants to see is a smaller federal workforce, which is why we've seen this administration offering buyouts that tens of thousands of people, we understand, have signed up for to leave the government by the end of this month. That deadline now obviously extended until Monday. But even if not enough people take it, the administration has suggested they're still going to be trimming down a lot of these federal agencies. What ultimately will that do to the labor market? As you mentioned, government jobs in your very first answer.
Right. Well, I have, the utmost admiration for anybody who wants to take President Trump's deal and have 9 months of vacation and move to a different kind of job afterwards. And there's a lot of opportunities to do that. And the federal workforce, as everybody knows, it's very difficult to trim the federal workforce. And so President Trump is offering this buyout opportunity, and he wants to make it more efficient. I mean, if you have a private sector company that doesn't do a good job, it goes out of business and those workers find other positions to go to. That's not the same in the government, where people just keep jobs even if they're not doing a good job. And I have to say, most government workers are doing a great job. But for those that are not, it's very difficult to get rid of them.
Well, and we do understand that might be the next stage of this, that they've asked for a list of low-performing employees, and that may be where some of this culling happens from here. But I just, the notion of a smaller federal workforce overall, is that going to lead to some messiness in the economic data that we could receive in the next several months?
I think this is going to be swamped by low electricity prices, leading to more manufacturing coming from Europe. I mean, here we're going to get rid of net zero. They have net zero in Europe and in the United Kingdom, driving prices higher, deindustrializing. So if we could reindustrialize to pick up some of those jobs from these European companies, we're going to be doing great.
We got other data today as well in the form of University of Michigan consumer sentiment, which actually hit a 7-month low, in part because inflation expectations for the next year picked up to more than 4%. There's concern around tariffs here, specifically on the part of American consumers. It seems we've heard from plenty of people close to Trump or aligned with his kind of economic thinking that tariffs, if anything, would be a one-time price increase versus something persistently inflationary. But if people expect inflation and inflation expectations start to run away, will that not have the same effect ultimately? Will they not start then demanding things like higher wages, and we see this trickle back into the labor market as well?
Well, President Trump has shown that he wants to use tariffs as a negotiating tool. So he put the tariffs on Canada and Mexico. Then Canada and Mexico said they would increase border security, so he took off the tariffs. China, he left the tariffs on at 10%. But China is very much dependent on its exports to the United States for its economic growth. It might very well swallow some of these tariffs. And in China, China subsidizes energy, labor with slave labor and forced labor in Xinjiang, capital with low interest rate loans. I mean, Kaylee, did you know that China is selling a car for $13,000 in Europe? BYD, the major auto company exporter, for $13,000 in Europe. China is subsidizing and undercutting its industries. We spend money on providing Medicare, Medicaid, Social Security, housing vouchers. We keep people living well. They take their government money and they subsidize their companies to undercut ours and European companies. Volkswagen layoffs in 3 plants, partly because of these cheap Chinese vehicles. We don't want that here.
All right, Diana, thank you so much for joining us for these important Jobs Day conversations. Diana Furchtgott-Roth is Director for Climate, Energy, and the Environment at the Heritage Foundation, also former Chief Economist at the Department of Labor. And as we end our conversation on tariffs, we, of course, got some news on tariffs from the president in the Oval Office earlier today when he said that he would announce next week reciprocal tariffs on our trading partners. We'll have to await the details on that, but he also didn't rule out tariffs on Japan, as he said he is looking for an end to the trade deficit with that country. All of this happening as he meets at the White House with the Prime Minister of Japan, which is underway as we speak. Shigeru Ishiba is sitting down with him. We expect a press conference to take place at some point this hour. And as we consider what is on the agenda for this meeting, we turn now to an important voice, the former U.S. ambassador to Japan, having just wrapped up several years serving in that role. Rahm Emanuel is with me now. He, of course, also served as chief of staff to President Barack Obama. Ambassador, thank you for being here. When we consider what the Trump administration specifically might want to get out of this meeting and what Japan is hoping to get in return, what are you looking for?
Well, it's across a broad range of issues. One, Japan is our #1 foreign direct investor for the last 4 years. About 1 million Americans work for them. So ensuring there's a stability in that economic relationship is a principal, not only trading partner, but then that kind of ripples into the next period for the United States, which is Japan's the long pole in the Indo-Pacific for the United States. Indo-Pacific is a home game for China. It's an away game for the United States. You level the playing field with your allies. Our largest military footprint outside of the United States in any single country is in Japan. Well over 50,000+ American servicemen and women. It's the only place in the world we have a permanent aircraft carrier permanently based there. In addition to that, whether you're looking at the Quad with India, Australia, Japan, the United States, the trilateral relationships between the United States, Japan, the Philippines, United States, Japan, and Korea, the constant there alongside the United States is Japan on the diplomatic front. And it's key and essential when you looked at some of the export controls that the United States put on and dealt with from China on semiconductors and other high technology. Who's the other partner that walks the walk with the United States? Japan. So when you look at that composure, there's a lot to work with, both on economic statecraft, national security, and also on the diplomatic/political arena.
Well, when it comes to economic statecraft, though, when Donald Trump is suggesting that tariffs on Japan potentially would be on the table, what would that do to potentially this relationship, which you've just been described as being incredibly key in the Indo-Pacific?
Not only is not only for the last 4 years has Japan been the #1 direct foreign investor in the United States. 1 million Americans work for Japanese companies. About 43% is the back of the envelope, so it's not for peer review. But about 43% of that investment is in the manufacturing industrial place. You put tariffs on, you're going to affect a lot of that investment in the industrial area. Second, the United States represents about 9–10% of Japan's LNG. There's clearly a place to improve on that, or Japan can turn to other markets. I think we're the 5th largest United States LNG exporter to Japan. There's a place to be worked on from a nuclear SMR capacity. So there's a lot more economic engagement to happen rather than just tariffs. And I think, in fact, when I was there as ambassador, we improved Japan's involvement with the United States on ethanol and other soybeans and beef, a whole host of areas agriculturally, let alone industrially. We're the largest foreign direct investor in Japan. So engagement is where I would start rather than tariffs, because there's more to be gained given you have a willing partner on a whole host of front. And again, you're right to say, okay, let's talk about economics, but it ripples and it doesn't stay within a lane. It affects then what are we doing on national security? I mean, before there was a single tank on the Ukrainian border, Japan agreed to go to 2% defense budget, 2% of GDP for the defense budget. They are the largest acquirer of U.S. weapons. They're going to become the 3rd largest defense budget. The entire investment gain in Japan on the defense side is not in personnel, but in equipment, and we're the largest exporter of that area. So there's a lot of leverage points here for a more engaged partnership rather than kind of hostile. Let me also then take this to a separate place if I can. You can have a conflict or a confrontational approach to your adversaries. But if you treat your allies in the same way, you then become isolated. One of the unique things we did over the last 4 years is isolate China in its own backyard, isolate it more and more in the and around the area. If you constantly are confronting allies in the same vein in which you're confronting adversaries, you become isolated. And that doesn't play on America's strength. America's strength is not replicating, mirroring China's might through right through might. China's strategy, the United States strategy, is to replicate its strengths, alliances, values, economic integration. That's where we excel. And if you do a cheap version of China's wolf warrior and economic coercion, you're going to end up in the same place where China's economy is a mess right now. Their political support at home is a mess right now. And doing that will end up with the consequences. We were able, in the last 4 years, to isolate China because of their own actions. Doing the same thing China does, and a poor version of it, will only isolate the United States.
Well, as we talk about Japan as being an ally, the very fact that it is such an important ally was what led to a lot of confusion when the last administration moved to block the takeover of Nippon Steel of U.S. Steel. We learned from the president in the Oval Office today that he hasn't changed his mind on the idea that that deal should not go through. Now that you're out of the administration, looking back with hindsight, do you still stand by that call, or should this be revisited?
As I said then, I believed and I believed it then, I believe it now. One, the United States-Japan relationship is deeper, stronger than a single economic transaction. Second, 5 years ago with the United States, when U.S. companies were looking at Toshiba, Japan put up the same barriers that the United States talked about as it relates to Nippon Steel and U.S. Steel. Third, about 4 weeks, 5 weeks, maybe a little longer, prior to the Nippon engagement, the United States granted a Japanese company a $20 billion contract to replace all of China's cranes in every American port. Now, I can't speak to what says trusted ally greater than a $20 billion contract to replace Chinese cranes with Japanese-built manufactured cranes that would be manufactured in the United States, because we trust Japan not to use that technology and data to spy on us and to engage in intellectual and economic espionage. That is a deep relationship. Will you have disagreements over issues? Yeah. But they're they're one of the largest purchasers of American weapons. They're a big purchaser of American agricultural products. They're a big purchaser of American LNG. I'm not here to kind of advocate for Japan, but I'm saying engaging an ally, saying, here's what we've got to see, is a better strategy than to treat that ally as if it's the same as an adversary. We have a technological challenge with China. This is not a Cold War vis-a-vis ideological like Russia. It is a technological challenge with China. Japan is a major technological country. From semiconductors, there's about 18 companies that produce anywhere close to 80% market share. You want them on your side in this technological warfare.
All right, the former ambassador to Japan, Rahm Emanuel, joining us here on Balance of Power. Sir, thank you very much for your time as we await this expected joint news conference between President Trump and Prime Minister Ishiba. We'll have much more ahead here on Balance of Power on Bloomberg TV and radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks declining. The Dow, the S&P, NASDAQ 100 index, Russell 2000, all in the red. Stocks are falling as President Trump says he will announce reciprocal levies next week. A slide in consumer sentiment amid worries over inflation is also weighing on trading. Earlier in the session, mixed jobs numbers showed a moderating but healthy labor market. Here's where we stand. S&P down 32 at 6,051. That is a drop right now of 0.5%. The Dow down 280 points, down 0.6%. And NASDAQ is down 174, a decline of 0.9%. The 10-year at 4.49%, with the 2-year 4.27%. Spot gold up $7 the ounce, little changed, up 0.3%. 28.64, while West Texas Intermediate crude oil WTI up 0.5%, 71 even a barrel. Bitcoin up 1.1%, 97,865 right now on Bitcoin. Sources tell Bloomberg Nikola Corp is exploring a possible bankruptcy filing following a tumultuous period in which the electric truck maker has swung between stock market darling and scandal-plagued enterprise. Shares of Nikola down now by 36.4%. Recapping, S&P on this Jobs Friday, down 32, down 0.5% with a 10-year 4.49%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That's a Bloomberg Business Flash, and Balance of Power continues right now. Once again, your host, here she is, Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. I am indeed Kaylee Lyons in Washington. We're at the White House as we speak. A meeting is underway between President Trump and Prime Minister Ishida of Japan. We are expecting a joint press conference from the two. It was slated to begin, actually, about 13 minutes ago. It seems we're running a little bit behind schedule after some extended remarks in the Oval Office from earlier. But when that joint press conference begins in the East Room of the White House, we will, of course, bring it to you. And I'm sure the president and his team are eager to get that underway, as he has a pretty jam-packed schedule for the rest of the day. Expected to sign some executive orders later this afternoon before heading to Joint Base Andrews and then getting on Air Force One to go down to Mar-a-Lago, where a dinner will take place this evening with the president and with Senate Republicans and their spouses. And the question is going to be, is it an opportunity for those Senate Republicans to convince the president to go with their plan on budget reconciliation? Remember, the Senate idea is to split things up, do two different bills, reconciliation bills, one focusing on border and energy and defense first. We actually just got that resolution outline from the Senate Budget Chair, Lindsey Graham, then deal with tax policy later. This runs counter to what the House wants to do. One big, beautiful bill, roll it all into one, and that is what they spent hours working on at the White House yesterday. The House Speaker, Mike Johnson, as of yesterday evening, was suggesting they could have a framework and details out by today, but today he's saying it's going to have to wait until the end of the weekend or perhaps Monday. So things are squishy here, to say the least, and we want to get into it now with our political panel today. Jeannie Shanzano is with me, Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency in Congress, alongside Republican strategist Lester Munson. It's been a long week, y'all. He's head of the international practice at BGR Group. So, Lester, when we consider here, and you spent a lot of time, of course, in the Senate, this notion that the Senate is essentially trying to front-run the House, they're losing patience here and want to move first. Is this likely to happen, or does President Trump put his foot down at dinner tonight?
Great, wonderful mystery to have, Kaylee. I don't pretend to know the answer how this is going to shake out. The Senate's been sticking to its plan. The House has been sticking to its plan. It's a great lesson in civics and the differences between the two houses. The Senate is a little more able to resist the enthusiasms of the president and the people, and so their definite views on these issues are a little more kind of solid. Whereas in the House, you can see the speaker and the president want to kind of build up a lot of momentum behind all of these wonderful Trump policies, put them in one bill, and then Yahoo, get all the Republicans to vote for it, because the House is a little more subject to kind of the emotions of the time. So it's, I don't know how it plays out, but it's a great lesson in civics.
Yahoo, Jeannie. Well, when we consider the House specifically, of course, their whole idea of one big bill is essentially because they need sweeteners for people who are going to be unhappy with parts of it. And that's why they want everything included. The hardline conservatives who may not be happy with the level of spending cuts, for example, or things like the SALT cap being raised, at least getting what they want when it comes to the border and energy. If you split these things and you do the border and energy incentives first and then the tax policy, the SALT people don't get what they want, it becomes less likely that both of those reconciliation packages can get through the House, right?
That's absolutely right. You know, I'm getting a sense that the senators don't feel for Mike Johnson the way I feel for him, thinking about how he's going to thread this needle. You're absolutely right. They want the big bill because they want to put sweeteners in there because he has a 1 vote, 2 votes, depending on when these specials occur, majority. And this is the challenging part of it. Usually it's the Senate because they have to meet a filibuster. Not in this case. It's the House that has the uphill battle. And so you'd think the senators would have mercy on Johnson, let him try to push through his one big, beautiful bill, but they're not. And I was fascinated to hear Jody Arrington say, we still want essentially the one big bill, but if Donald Trump wants to go with the Senate's plan, we'll go with that. So maybe there's an opening there, and maybe it's going to depend really on where Donald Trump lands on this. And of course, he seems not to care so much the process, but he wants what he wants in these bills. And that includes, you know, no tax on tips, no tax on Social Security, all of those things that he wants to include in there. He seems to say that if he can get all those, he doesn't quite care how this moves forward. So it may be up to Donald Trump in the end.
Well, and add to that list that Jeannie began, Lester, obviously the SALT cap, which we mentioned, but apparently also ending the carried interest tax break, ending tax breaks for billionaire owners of sports teams. Interesting to introduce that idea as he gets ready to have travel to New Orleans for the Super Bowl this weekend. But when we consider all of these disparate ideas, is it likely that he actually is going to get all of it, whether it's one piece of legislation or 2?
No, but these are all great negotiating tools and items. I think what the president really cares about is this no taxes on tips idea, which has proven to be enormously popular. I recall President Trump's opponent in the last campaign immediately adopting the same issue as a great idea. So I think a lot of what we're seeing is still kind of shaping the negotiation to come. We've got a long way to go before anything gets passed, I think.
Well, we don't have that much longer to go, though, before some government funding bills or a continuing resolution needs to get passed, because, yes, we still have to deal with that by mid-March. And we got some conflicting messaging today, Jeannie, from the Speaker of the House and others, with Mike Johnson warning talks over the immediate spending had stalled on government funding. The House Minority Leader, Hakeem Jeffries, saying that Johnson's comment was just projection since Republicans hold all the power. But does this portend over the coming weeks Democrats not being willing to play ball on these must-pass measures as they have been for the last several years?
I think that's exactly what we're hearing. You listen to Democrats on the ground. They are incredibly frustrated given the first 2-3 weeks of Donald Trump's administration and the way he has plowed ahead with, they feel, little respect for the separation of powers and the right of Congress to control the purse and many other things. They feel that it is the height of insanity for their elected officials in Congress to agree to anything with Republicans at this point. So there is a big debate on the Democratic side. Do we go ahead sort of agreeing, say, with his nominations? And we saw yesterday with vote, the answer is no. And so I think it's going to become, excuse me, Kaylee, it's Friday. It's going to become increasingly difficult for them to, in the face of their own base, if you will, to negotiate with Republicans on many of these things, unless they get very big assurances on things like, say, U.S. aid and so many other things that are critical to Trump. So, you know, the reality is Republicans own it and Democrats are saying, you want to plow ahead like this, you have to bring your own people along. And of course, on things like the debt ceiling, that is a non-starter for conservative Republicans. So it is going to be a real battle in the Congress.
So with all that said, Lester, what odds do you put on a mid-March government shutdown?
I still think it's low. I think I know it seems like it's imminent. I think it's still 4 or 5 weeks away. Plenty of time for Republicans to sort out these trivial differences.
Trivial. Okay. Well, and your point is well taken. 4 to 5 weeks can be a long time, as it's been less than 3 weeks since Donald Trump took office. And I think we all know how long these last several weeks have felt, this week included, just given the pace of news that we've been receiving. But Lester, some of the things that Jeannie was alluding to here that Democrats may be looking for example, assurances on USAID, which the president was talking about today as something that needs to be closed down. The ongoing efforts of Elon Musk and Doge, which we've obviously discussed at length at this point. Are any of those things likely to change in the immediate future, given the political reality of Republican control of Washington?
Well, my sense of the aid issue in particular is that the kind of the destruction part of this effort is coming to a close, and the rebuilding part is kind of imminent. So I think, you know, the administration still has a certain amount of money from Congress that it's obliged by law to spend on foreign assistance. That is going to happen in some form, and it looks like they're starting to put together the pieces to actually spend that money. So I think we'll know a lot more about this USAID issue in a week or two, and how the Trump administration actually plans to be positive on these issues in some way instead of just destroying everything. So I think this thing's about to take a turn in a different way. I think this thing's about to take a turn in a different way, and what that looks like and what the priorities are and how many people actually end up being fired and that kind of thing is going to be the thing that's discussed, not so much what's happening today.
Jeannie, do you see this as a phoenix will rise from the ashes kind of scenario?
No, you know, I really don't. And I'm listening to Lester, and he's saying they have time. They have a little bit of time to resolve their differences. But let's just think back to December. There was no resolution of those differences. That's why they pushed this until March. And so I'm not quite sure what has changed. I mean, you still have Republicans in the House who say, like Chip Roy, there is nothing that is going to change my mind on lifting the debt ceiling. You have to have pay force. You have a president who wants tremendous cuts. You know, the list just goes on and on. So, you know, sure, if they can resolve these differences with, you know, sticks or carrots in some way, they may get to a resolution. But I'm hard pressed to imagine how they do it. You know, the reality has been it is Democrats who have gotten Republicans across the line in the last few years and kept the government open. If Republicans have to do it on their own, which is seeming likely at this point, how do they thread that needle? When do the Chip Roys of the world come along, and what do they get in return for that?
All right, Jeannie Sheehan Zaino and Lester Munson, our political panel on this Friday. Thank you both so much for joining me. And I just want to point out, as Jeannie brings us back to December 14th was actually the Army-Navy football game in which President Trump, or he was then president-elect, and Republican leadership in Congress all went to the Army-Navy football game. They were supposed to hash out reconciliation during that game. Now, here we are on the eve of the Super Bowl with both the Speaker of the House and President Trump slated to attend. Still don't know what that reconciliation path forward will look like, but maybe they'll figure it out in New Orleans as they watch the Chiefs and Eagles go at it. We know Donald Trump has been truthing plenty about that. We'll have more ahead here on Balance of Power on Bloomberg TV and radio.
7:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks trading in the red. We are off session lows, but still losses for the Dow, the S&P, and NASDAQ right now. S&P down 28 at 6,055, a decline of 0.5%. The Dow down 269, down 0.6%. NASDAQ down 166. For NASDAQ, the composite index down 0.9%. 10-year at 4.49%. The 2-year this jobs Friday, 4.27%. Spot gold up $5 the ounce, up by about 0.2%, 28.61. And West Texas Intermediate crude up 0.6%, 71.01 per barrel of WTI. Expedia Group shares now up 14.7% after posting better than expected gross bookings in the final months of 2024, reflecting resilient demand for travel during the winter holiday season. Again, Expedia right now advancing by 14.7%. Recapping, S&P down 33, down 0.5%, with the 10-year at 4.49%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues right now. Back, we go to Washington. And once again, your host, here she is, Kaylee Lyons.
All right, Charlie Pellet with a look at the Friday trade, the Jobs Friday trade at that, as the market reacts to the softer than expected payrolls report we got today. 143,000 jobs added in the month of January, though the unemployment rate lower than expected at 4%. Hotter wage growth as well, as we've continually told you here on Bloomberg TV and radio throughout the day. And here in Washington, the reception to the data, at least on the part of the Trump administration and this brand new White House, has been that it's evidence that the Biden economy was worse than thought, and that the growth initiatives of the Trump administration are going to be necessary. But of course, a lot of those initiatives are a question now as we consider the path forward for the labor market, be it the shrinking of the federal workforce, the deportation of migrants, what that could ultimately mean for the labor market overall. And then there's things like tariffs, which are reflected in a drop in UMich consumer sentiment today and an increase in inflation expectations. And just what exactly trade policy is going to look like and how it's going to filter through the U.S. economy. These were all questions that my colleagues Anne Marie Hordern and Jonathan Farrow had for the director of the National Economic Council, Kevin Hassett, today. And here's what he had to tell them about trade specifically.
You know, the bottom line is the first time I ever met the president, right at the beginning of 2017, that one of our first discussions about trade policy was about reciprocity. And so 100%, that's going to be a key factor in President Trump's thinking and his team's workouts from his thinking as we work forward. And when you think about, well, what is reciprocity? How should we think about it? Then a lot of people focus on tariffs. And if we look at just tariffs, then you'll see that our trading partners tend to have tariffs that are 2 or 3 times higher than our tariffs. And so, like, if we were going to be reciprocal, then they could come down or we could go up, but it would be a lot different trade policy. But the way I like to think about it is just think about the fact that we have a tax system in the U.S. that's fundamentally different than the tax systems everywhere else in the world. And so I had my guys a couple days ago just update the numbers I always look at, and we found that U.S. multinationals had paid foreign governments $370 billion in taxes because of value-added taxes and income taxes in 2023. And foreign multinationals operating in the U.S. paid the U.S. government only $57 billion in taxes. And so they have 3 times the GDP we do, you know, globally. We're about a quarter of GDP. And we're paying $370 billion, and they're paying $57 billion. And that's not reciprocal. That's something fundamentally different. And what President Trump wants us to do is to come up with a really smart program that includes trade policy, tariffs, and revisions to the tax code. And he wants us to make it work so that America's on a level playing field again. And the reason he wants to do that is not because of the numbers, it's because of the people in America who don't have jobs because we're paying $370 billion a year in taxes to foreign governments in order to incent our companies to not create jobs here, but create jobs overseas.
Kevin, you didn't mention Europe,
to the
but it sounds like you're talking about Europe. What's the ask of the Europeans?
The president is going to negotiate with the Europeans. He's going to negotiate with everybody. And at the time when he does that, you'll find out what his asks are specifically.
That was Kevin Hassett, the director of the National Economic Council at the White House, earlier in conversation with our colleagues on Bloomberg Surveillance. And note he said one key word there as part of his answer, this notion of reciprocal trade, We've also heard a little bit about that from the President of the United States today, who is meeting still as we speak with the Prime Minister of Japan, Geru Ishiba, and they sat down in the Oval Office for the beginning of their meeting. The president answered a lot of questions from reporters, including whether or not tariffs would be in play for Japan potentially. He did not rule those out. He also said he's going to have an announcement on tariffs next week.
I'll be announcing that next week, reciprocal trade, so that we're treated evenly with other countries. We don't want any more or any less. So I'll be announcing that next week. And many other things having to do not even with trade, but other things.
So I guess we stay tuned for what those other things are. But when we consider the other things that are likely to come up in the meeting between these two leaders as they continue to do so behind closed doors before a scheduled press conference that is clearly running late at this point in the East Room of the White House, we consider the U.S.-Japan relationship with Nick Wadhams, who covers national security for us here at Bloomberg. He's joining me in our Washington, D.C. studio. So, Nick, when you put aside the kind of economic questions here, which clearly there are many, as Donald Trump talks about trying to end the deficit with Japan, there are also important geopolitical questions likely on this agenda, including countering, say, China in the Indo-Pacific. How crucial is the Trump-Ishiba relationship in doing that?
Well, I mean, that man-to-man relationship is going to be really important. I mean, based on past precedent, Japan essentially in Trump's first term put a huge priority on the relationship between Trump and the then prime minister who was later assassinated, Shinzo Abe, and that was really seen as the conduit through which everything went. So you did have a situation then when essentially amid all the Sturm und Drang, the back and forth between the U.S. and many of its allies, Japan was largely spared from any of that. And at the time, a lot of that was really put down to the relationship between the two of them. So what you're seeing here is an attempt, I think, by Japan to essentially do a redux of that and try to establish a personal rapport and use that as the basis to proceed. Big question, of course, is how they're going to do that. Japan wants to expand its military. That may be something Trump likes to hear. So just see how it goes. Well, and would it be expanding the Japanese military in exchange for not having to have as large of a U.S. military presence in Japan, which obviously is substantial as the administration kind of thinks about the U.S. footprint throughout the world? Right. I mean, so this was the one place where there was a bit of an issue between the U.S. and Japan last time was Trump's argument that other countries are not paying enough for U.S. troops to be stationed on their soil. It should be mentioned, at least according to people we speak to, that the U.S. has a very, very good deal with Japan. They pay for a lot, but Trump has often wanted more. But I think the way that they're going to see the quickest way to Trump's heart is through defense spending and saying, listen, hey, we want to increase our defense spending. We're boosting our military budget. And by the way we're going to do that is spend on weapons from the United States. So that will be music to Trump's ears. And I think through that, they're hoping to avoid any conversation about the basing issue. They want to keep those U.S. troops there. They'll say, listen, let's not open up this can of worms on the basing agreements and stuff like that, but we'll buy a bunch more weapons. Well, and when we consider this defense positioning overall, yes, it's about countering China, as mentioned earlier, but how much is this also about North Korea? Other things happening in the Indo-Pacific? I mean, they all play a role. The big question for us is who is going to have Trump's ear on these issues. North Korea was a big priority for him in the first term. He thought that he could get the deal with Kim Jong-un. They met a couple of times. They had a big summit in Hanoi. Obviously, nothing ever came of that. You had absolutely no contact between the Biden and North Korean governments in the last 4 years. Whether or not they want to make that a priority again, we do have evidence, obviously, that North Korea has only continued with its nuclear program. That is a concern for Japan and for South Korea and others. But the big question is who's going to make that a priority amongst Trump's inner circle. And right now, as far as we can tell, North Korea is just not really on the agenda that much. China is to some extent, but really through the tariff and economic lens, we haven't really seen sort of geopolitical play here where they're trying to push back against Chinese influence. It's much more sort of dollars and cents. Well, and on the tariff idea, which again we heard from President Trump about earlier, not ruling out tariffs on Japan either, how do those kind of economic relationships then color the national security-oriented relationships? If Japan is a key ally in countering these U.S. adversaries,
and then you slap tariffs on goods coming from Japan, I would imagine in some way, at least, that is disruptive.
Right. I think it would be very disruptive. However, I mean, when listening to the remarks from the president just there, I mean, in what circumstance would President Trump ever say he is not going to consider taking punitive action against anyone? I mean, I just can't imagine he would say, no, we're not going to think about tariffs against Japan, because it just fits into the whole sort of leverage, counter leverage, negotiating tactic situation that he sees. If he can create some butterflies in the stomach for an ally like Japan, who knows what that will do? Maybe they'll just say, okay, well, let's tack on a few extra $1 billion on defense spending or whatever it may be. So I just see it as, my sense is that there is not a plan in the works to tariff Japan. It's just a little bit of another one of those things where Trump sort of likes to goose allies and adversaries alike.
Okay, so then let's talk about a plan that we do understand is in the works. The Munich Security Conference is next week, begins next Friday. Our reporting indicates that the administration is preparing to present a peace plan for Ukraine in Munich. We heard from President Trump in the Oval earlier the suggestion that he could be talking to Putin and Ukrainian President Vladimir Zelensky soon. I'm not sure we have real firm details about that, but what do we know about the conversations underway and what could happen next week?
I think what we're seeing is a gradual sense that they are getting closer to some notion of what conversations around resolving this war will look like. I'm not sure we are at the point where they're going to put a formal document on the table to say, sign at the dotted line, this is what we see as our vision, but really more, they've been talking about this a lot. Keith Kellogg, who's the president's advisor on Ukraine, has been talking about this a lot. They see Munich as a place to really jumpstart these conversations and say, okay, here are our outlines. Here's what we're thinking. Let's have a conversation about that. On the Putin and Zelensky possibility of a meeting, I mean, we know the president wants to meet with Vladimir Putin. He has obviously met with Zelensky before. He is not going to be going to the Munich Security Conference. That'll be J.D. Vance. I'm sure if Zelensky goes, he and Vance will meet. But we're not really tracking a sort of formal tete-a-tete between President Trump or between him and Zelensky right now.
Well, and do we have a sense of whether, and I guess we've gotten some hint of this from Zelensky, if the U.S. is like, okay, yeah, let's make a deal, we're pushing this now, we want to get these conversations started, that all parties here are ready to come to the table.
Right.
We've reached that point.
I mean, well, that's the big question. And it's why I think you've seen sort of reality settle in with a lot of the Trump administration on Ukraine, which is he says, okay, I can resolve this thing within 24 hours. Then they said, oh, maybe it'll take 6 months. I mean, you have to have partners, or maybe you don't want to even call them partners, is Russia a partner, come to the table. And right now, Russia has given no indication that it really wants to actually sit down and have formal negotiations. So as much as Trump wants a deal, at the moment, it sort of looks like Russia is not willing to play ball.
And finally, just to go to one more part of the world that was mentioned by the president earlier in the Oval Office, he was questioned once again about the U.S. plan when it comes to Gaza after, obviously, the Riviera of the Middle East remarks earlier this week. He reiterated that they wouldn't need, he said, U.S. troops in Gaza. Are we getting a clearer picture of whether this is actually the plan as we understand it, or is this more just bluster and trying to, give Israel a better leveraging position?
So I think what my interpretation of this, listeners feel free to disagree, but we have heard some indication from the folks around Trump that really this is another negotiating tactic that is designed to put pressure on other countries in the region, which is, hey, Egypt, Jordan, you guys got to step up. You got to do something. Saudi Arabia, do more. If you say you have the interest of the Palestinians in mind, you need to do more for the Palestinians. If you don't do something for the Palestinians, we are going to do something for the Palestinians. Whether there would actually be a plan for the United States to take over Gaza, I mean, I think the likelihood of that is extremely remote, and you should see this more as, again, an effort by President Trump to sort of make folks in the region sit up and take notice and think, okay, what are the possibilities that he could do something here, and what do we need to do in response?
All right, Nick Wadhams, who leads our national security coverage here at Bloomberg. Thank you so much, taking a trip around the world with me here on Balance of Power. We much appreciate it, though. Again, the focus today is on the relationship, specifically between the U.S. and Japan, as we are still awaiting that news conference in the East Room of the White House, a joint presser between President Trump and Japanese Prime Minister Ishiba. We will bring that to you when it begins here on Bloomberg TV and radio, with, of course, many still outstanding questions, including the economic relationship between these two countries, whether or not they actually can get rid of Japan's trade surplus with the U.S., as the president suggested in the Oval Office earlier. And will we get more details on those reciprocal tariffs supposedly being announced next week? They'll have more on Bloomberg Business Week. I'll be back for more analysis on the late edition of Balance of Power at 5 p.m. Eastern Time, right here on Bloomberg TV and radio.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week for this. Yay, it's Friday.
Is it actually Friday? It seems like
it's Friday, as our
it's
producer
Saturday and we're
Sarah
working.
Livesey likes to say. It's Friday.
Hey.
Because it feels like it's been a month.
It does feel like it's been a month. Hey, look what's going on with stocks. A lot of red across the screen. The Dow down 0.9%, the NASDAQ Composite down 1.3%, and the S&P 500 down 0.9% as well.
Yeah, gotta say that concerns about tariffs, maybe additional tariffs coming our way, and the latest drop of U.S. economic news reigniting some of those inflation fears. So that is definitely weighing on the trade. We're going to get more on that in just a moment. Our focus, though, is some of the economic news we did get today, including that first jobs report of 2025 and those reads on consumer sentiment and also inflation expectations. You know, what they say, Tim, about the U.S. economy, growth, future Fed moves.
Michael McKee is going to be joining us in just a minute, so stay tuned for that. Chipotle's CFO joining us. Don't think he's bringing burritos guac, but he's bringing earnings and, of course, the company's next chapter.
He's canceled. I'm just going to say, no. We can't wait to talk to him. Also, we're going to get into Apple and their long-awaited overhaul of budget iPhones. Could that be possibly, maybe, really soon? We're going to check in with our Mark Gurman.
All that and more coming up over the next hour right here on Bloomberg Business Week. First up, though, a check on today's trade and top business stories. Here he is, Charlie Pellet.
Hi, thank you very much. And here's what's going on. And we have got the Dow, the S&P, NASDAQ 100 index, Russell 2000, all declining, not just lower, but just about the worst level of the day. 2 hours to go ahead of the closing bell. Right now, the S&P down 52, 6,031 where we stand, down 0.9%. Dow Industrials down 411 now, also down 0.9%, while the NASDAQ Composite Index is down 255, a decline of 1.3%. The Russell 2000 Index lower now by 1.2%. The 10-year on this Jobs Friday, 4.48%. The 2-year, 4.27%. Spot gold down $5 the ounce, 28.61, down up by about 0.2%. To be clear, gold up $5, and West Texas Intermediate crude up 0.5%, 70.94 a barrel. Traders are concerned about the potential impacts of U.S. tariffs on inflation, and today's economic data has only underscored concerns over price increases. Bill Ackman says his hedge fund, Pershing Square Capital Management, owns 30.3 million shares of Uber, citing the strength of the rideshare company's management and saying the stock is undervalued. Uber shares today surging by 7.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. I do appreciate it. I do want to remind everyone, too, that we are awaiting word from the White House. U.S. President Donald Trump and Japanese Prime Minister Shigeru Ishiba are set to hold a news conference. We will bring you that news conference when they do begin to speak.
All right, no doubt about it. A lot going on out of Washington, but also out of the economic community and also out of D.C. because we got some reads from the U.S. government on the labor picture. U.S. jobs growth moderating in the month of January, our first read on 2025, while annual revisions from the government also revealed less vigor in the labor market last year than previously thought. And there was a read on consumer sentiment and consumer expectations about inflation. So, yeah. We've got the right person to sum it all up, what it all means. Let's get to it with Bloomberg News international economics and policy correspondent Michael McKee, who also got a shout out from the White House today, or at least from
Kevin Hassett,
a key advisor to the president.
You can look it up on Bloomberg and listen to the video. I've just known Kevin for a very long time. But
he said he's been watching you do jobs reports for, what, 20 years? Is that what he said?
I think it's been longer than that. So. But there is a lot to talk about today, so I think I'll invoke the Senate privilege and filibuster, and then the president can't get on TV, and all those reporters standing up in the East Room are going
I hate to tell you.
standing there for a long time. Payroll change today, 143,000, not super strong in relation to what we have been seeing.
Yeah.
They revised December up to 307,000, but that would have been considered strong in 2019. So it's still a fairly strong number, and unemployment goes down to 4%. Now, those two changes basically come because they did the revisions to the overall numbers, and we see the labor force rise, and that changes the numbers. And in the household survey with unemployment, you can't compare December and January. So we're at 4%. We can't say it's one reason or another, but we are there. But because hours worked went down a little bit and unemployment went down a little bit, average hourly earnings went up a little more than expected. 0.5% puts it at 4.1 for a year, and that's above inflation. So bottom line in terms of the labor market, since we're waiting for the president of the United States to come out, we can say that Joe Biden went out on a high note as far as the macro economy is concerned. Then we got the Michigan numbers, and this is where I said that today's numbers were
The good, the bad, and the ugly.
Yeah.
I love that.
Michigan sentiment drops to 67.8 from 71.1. And one-year inflation expectations rise a full percentage point to 4.3%.
Why?
Tariffs, according to Joanne Shu, who is the director of surveys for the University of Michigan. People were really worried about the president's tariffs raising the cost of living.
When you say people, who are we talking about?
The people surveyed by.
Who are the people surveyed? Are they normal, everyday Americans?
You know, that's a setup line for a great joke, but
You
I'm
are
just
not
gonna,
normal by any means. None of us are.
I'll tell you what, I'm not normal. That's why they're not surveying me.
None of us are normal.
Yes, they are. What you? I mean, it's the same as essentially a political survey. The methodology is different.
Well,
But it's asking people. It's asking people.
They're asking
American
people.
public.
The reason I ask is because I always want to know what's on people's radar. And tariffs are on our radar because we're Bloomberg and this is what we cover.
No,
but they're on normal people.
We're
not normal.
about that because tariffs obviously will raise the cost to you, but the president's also been talking a lot about tax cuts. Tax cuts have not broken through. Tariffs, she said, have broken through in the media. There's been so much talk about it that people are now focused on it, and the idea that it will raise the cost. And that part broke through as well, that it is a cost to the consumer rather than China will pay for it.
So, Mike, what does it mean, though, in terms of how it impacts all of us? Are we all of a sudden hoarding because we can get things more cheaply now, spending more money? Or are we starting to slow down because we're concerned about how much more money we're going to need to buy things? Like, what does it do?
Some categories we did see buying ahead. Autos went up in December, and we'll see, and they went up in January because people wanted to get ahead of potential tariffs. There isn't a whole lot of other evidence that that's happening. Some machinery parts, particularly metal stuff, was stocked up a little bit on. We saw it come in imports, but not so much the rest of it. We'll see if the tariffs get closer. You know, a part of it, I think, is people didn't know what we get from Canada besides maple syrup. And so they weren't running out to buy
a lot of stuff.
To buy that stuff. Yeah, we do get a lot from Canada.
Including maple syrup. All right, Michael McKee, thank you so much. Have a great weekend. Mike McKee, of course, Bloomberg News international economics and policy correspondent right here in studio. Tim, we're going to stay with the labor report. We've got another take on it.
Yeah, let's get to Amy Glazer, Senior Vice President at the talent and employment firm Adecco. She joins us from Florida this afternoon. How would you describe, Amy, the corporate pace of job postings today? Because over at Adecco, you all have such a great view of what's going on when it comes to the supply side and also the demand side.
Yeah, we're still seeing job openings outpace the job worker that's looking for a new job. So we're at about 1.1 job openings for every candidate out there seeking employment. So we're still seeing stability, a resilient labor market continue.
So in terms of any differences, Amy, compared to 6 months ago, compared to a year ago, is it better? Is it the same? Is it showing some slight weakness?
So I think there's a lot of noise in the month of January, specifically this year. So we dealt with some calendarization with New Year's falling in the middle of a work week, which always puts off new hires and starts. We also dealt with the weather impact, both between the wildfires and the Arctic blast. So there's a little bit of noise there that makes it really hard to understand what the trends look like. We're not seeing a dramatic difference right now. And basically, from a lot of the employers I'm talking to, there's quite a bit of optimism as we go into the next couple of months.
We have been trying to figure out the economic impact of the devastating wildfires in Southern California. What insight did we get into at least the labor side of the disruption of those last month?
Yeah, definitely geographic impacts both on the West Coast and then up in the Northeast. It varies by industry as well as by specific location. We see, especially on the East Coast, a lot of manufacturing was hit, as well as on the West Coast. And we'll continue to see things rebound. In fact, we're seeing a little bit of an uptick already with construction and relief efforts and things of that nature. So it's just a really fluid and moving dynamic sector right now.
Hey, one of the things I want to ask you as we await for President Trump to make some comments along with the Japanese Prime Minister, they have been meeting today. They are expected to hold a press conference soon from the White House. We'll take everybody live there when that happens. In the meantime, though, Amy, how much of, I'm curious, the conversations you are having with your clients, with corporations, or those who are involved in corporate hiring, you know, where they're saying, you know what, we're just going to kind of take it day by day, week by week, month by month until we get more clarity about policies coming out of the White House?
Carol, you're exactly right. I think it's too soon to tell. We're monitoring it closely. Other employers are monitoring it closely. I will say the one thing that really employers have in the back of their head is going through COVID taught them the sense of resiliency and how to quickly adapt and be agile and shift. So I do think there's a sense of confidence within the employers that regardless of what the policies shake out at, that they will be able to adjust and swiftly take action to ensure business continuity. So I think that's what they're focused on right now.
In terms of companies not being able to get all the employees that they need, how does migration into the U.S. factor into the equation and how that could go down during this administration?
Yeah, I think we're all still watching to see what the full impact of that is. Obviously, the laws of supply and demand will still exist. If there are less employees out there, we could see things like wage pressure start to increase as we move on. So we're really just watching it, cautiously optimistic at this moment, but only time will tell.
What about in terms of what we are seeing in regards to wages? Our Mike McKee was just giving us a lowdown on the stats we needed to know coming off that monthly jobs report, talked about average hourly earnings increases with an explanation of that. But what are you seeing from clients who are looking to hire? Are they having to pay up? Are they having to, it's the same as we've seen over the last 6 months? What are we seeing?
I think it's very comparable. Carol, we are seeing this time of year seasonally in January, a lot of companies give annual raises. So that's another just kind of common sense reason why we might see wages uptick a little bit in January. We did hear some whispers in November, specifically in the warehouse transportation along with seasonality, that there could be some wage pressures and base pay rates starting to increase, especially in the blue collar sector. So we're just kind of waiting to see if that's a trend that's going to continue or if they were simply whispers that are going to die out.
Based on what you know from your perch at Adecco, should the Federal Reserve be more concerned about the labor picture of its dual mandate or about the inflation picture of its dual mandate?
You know, Tim, I'm not an economist, but what I can tell you is I do think the market is going to continue to remain strong. Layoffs and quits continue to remain low. So as long as that continues, I think, you know, it's up to the Fed to decide what happens there. But I can tell you, I do see an ongoing, steady labor market in the U.S.
Amy, just 30 seconds left here. If you had to take, you know, kind of one word or one quick description of what's interesting about today's labor market, what would that be?
I think stability and steadiness. And it's kind of refreshing that we continue to see 6-digit, you know, improvements in new job ads.
All right, we're going to leave it there. Hey, listen, thank you so much. Enjoy the weekend. Amy Glazer, Senior Vice President at the talent and employment firm Adecco, joining us from Florida. All right, folks, that is kind of what you need to know when it comes to the economic setup on this Friday. But there's a lot of company news courtesy of earnings that we've got to get to.
Yeah, one stock in particular that's on our radar right now is Amazon. Shares down 4% right now. Microsoft is also on our radar. The company, Amazon that is, says it cannot keep up with AI demand, kind of like what's going on over at Microsoft. And that affected its outlook for first quarter net sales. So let's get into it with more of what we learned on the analyst call last night. Back with us is Bloomberg News technology reporter Matt Day, joining us this afternoon from Seattle to give us Mandeep Singh, Mandeep Singh is joining us this afternoon from home right now. Mandeep, good to have you with us. Give us an idea of what we heard in detail on Amazon's call last night and sort of the different nuance that we have between that and what we had from Microsoft.
I mean, now that all the 4 hyperscalers have reported their CapEx guide, it's pretty obvious that there is no impending cliff when it comes to, you know, the CapEx spend, and this CapEx will likely have a very long tail. And look, in the case of Amazon, like Google and Meta, they upped their CapEx guide to $105 billion run rate. And I think when it comes to their AWS growth, I mean, clearly it's lower than the other two clouds, which are more around 30%, but Amazon is obviously a higher run rate cloud business. So I think the question that investors are asking is, how much does that incremental spend on CapEx translate into cloud growth next year? So AWS growth, what sort of increment we are going to see? Because in the case of Microsoft, you can see what their AI workload contribution is. It's not very obvious for the other two clouds what their AI contribution to the cloud revenue is.
So, hey, listen, Mandeep, did you feel like you got more clarity in terms of, you know, the AI situation, the demand, and meeting that demand from Amazon last night?
I mean, I would say the supply constraint is a common thread here. So everyone is calling out the supply constraints, and that is the basis for raising the CapEx. Where I feel they are falling short in terms of telling investors how that will translate into cloud revenue, whether it'll be 10 percentage point of AWS growth or it will be higher. And I think that's what will determine, you know, which cloud is positioned better, because I feel in the case of Microsoft, you see the additional contribution from their Copilot revenue, whether it's Microsoft Office Copilot or GitHub Copilot. In the case of Amazon, they operate more in the infrastructure layer. And even though they have Alexa and some Copilot offerings, they're not a big contributor to their AWS revenue. So to me, that is the part that I want to know more about, is how does that translate more into the infrastructure workload revenue where Amazon is the largest player.
That makes sense. Hey, listen, one thing I want to do is I take a step back. I mean, it's great for these companies, whether it's Amazon or Microsoft or Alphabet, to have this strong AI demand, right? Up to a point, because you want to meet that demand. Because I do wonder, like, could AWS customers who need AI and the cloud, can they go somewhere else? Could they go somewhere else if they have to wait too long?
I mean, right now, you know, everyone is saying they are GPU constrained when it comes to, you know, the supply side and really what it needs to run a workload. They have a lot of CPUs, the traditional cloud workloads. So that part is really dependent on what sort of data you already have on a cloud. And there is a lock-in element when it comes to, you know, running your infrastructure on a certain cloud. But when it comes to AI, I mean, a lot of it depends on where you have your existing data, because you want to customize the AI. That's why you would rather prefer to use the same cloud for AI workloads as opposed to going across clouds. And I think that part will become clearer in terms of, you know, how that translates into cloud growth in 2025.
So Mandeep, we've heard from Alphabet, we've heard from Amazon, we've heard from Microsoft. Those are the three biggest cloud players that are out there. How would you describe, and we know that, you know, we know who the biggest is. Amazon's the biggest, then it's Microsoft, then it's Alphabet. After these reports, after this quarter, and looking ahead to this year, who would you say is best positioned right now to capture the continued growth from AI cloud services?
I think based on the numbers that we have seen so far, I mean, clearly Microsoft has the most incremental AI revenue. They quantified it, $13 billion run rate. Both the other clouds have said multi-billion-dollar contribution. So based on our estimate, it's definitely less than 10 billion. But it's hard to, you know, put a growth number around that AI contribution unless you know what is the makeup of that AI bucket is. And in the case of Microsoft, it's more than infrastructure. It's the Copilot revenue that I highlighted before.
All right, we're going to leave it on that note. Hey, Mandeep, thank you so much, keeping us current when it comes to all things Amazon, but really also that AI spend and AI conversation we've been having so much. Mandeep Singh, he is our Bloomberg Intelligence Senior Tech Industry Analyst. We're going to talk to him in the next hour a little bit about Uber. You are listening and watching Bloomberg Business Week. One company that reported earnings this week was Chipotle Mexican Grill. Let's get to it because there's a lot going on at the company. It's certainly something watched very closely in the fast casual space. With us right now is Bloomberg News senior editor Nina Trentman and Chipotle CFO Adam Reimer. Let's get to it. Adam, great to have you here. Forgive my distraction because I've got one eye always on Washington right now, and we are awaiting some comments from the president. He is expected to make some comments soon. Let me just ask you first up, in terms of news out of Washington and running a company and, you taking, moving into the CFO position, what is top of mind for you right now in this environment?
Yeah, absolutely. So we're keeping a close eye on everything as it's related to tariffs, because that could have a decent impact on our business, like we shared, because we get about 2.5% of our business from Mexico as well as China and Canada. And so we're keeping a close eye on that. But in all honesty, we're focused on running great restaurants and ensuring that we're giving a great experience to our guests each and every day. That's our primary focus.
Adam, talk to us a little bit about the impact of potential tariffs on your business. You import a huge amount of avocados from Mexico.
Yeah, absolutely. So we import about 50% of the avocados that we use from Mexico. Several years ago, that was closer to 90%, but we've actually been looking to diversify to different countries of origin over the last several years. So we also buy avocados from the Dominican Republic, Peru, Colombia, as well as some others. And so that's really been an effort that we've taken into account for many, many years. So if these tariffs were to go into effect, it would have an impact on our business. I shared on our earnings call that would be about a 50 to 60 basis point impact on our restaurant level margins. But we're going to continue the diversification efforts that we've been doing over the next several years. And we believe that we'll be able to weather that storm if that were to happen.
Adam, we are so sorry. We do have to go, just to interrupt for a moment, because we are watching closely all things out of Washington. We are talking with the Chipotle CFO and our own Nina Trentman. Right now, let's go to the White House, where President Trump is also with the leader of Japan.
Remember that day. Thank you very much, everybody. Appreciate it. I'm delighted to welcome Japanese Prime Minister Ishiba Shigeru to the White House for the first time. And Prime Minister, it's an honor to have you with us, a great honor. Japan is a great country. Thank you very much. Japan is strong and proud. It's a nation that is home to one of the great civilizations in the history of the world. For nearly 80 years, the American-Japanese people have enjoyed a friendship like few others. We've had a great friendship across the vast ocean, and found ourselves united by bonds of history, commerce, culture, mutual admiration, and great respect. After our meeting today, I'm confident that the cherished alliances between our two countries and others also will continue to flourish long and into the future. The military cooperation between the United States and Japan is one of our closest security partnerships, and it's one of the closest we have anywhere in the world. Our service members work together every day to defend our common interests. Japan is committed to double its defense spending by 2027 compared to my first term. They've invested a lot of money because of my first term. We worked on that very hard with Shinzo, the great Shinzo Abe. And we look forward to seeing even more so. Shinzo and I worked very, very long and hard, and those numbers are very reflective after my first term. And now they're going up very substantially based on our conversations today. In addition to being vital for our shared security, Japan is one of the top purchasers of U.S. military exports and equipment. And I'm pleased to say that this week my administration approved nearly $1 billion in foreign military sales to Tokyo. The United States is totally committed to the security of Japan. We will extend the full strength of American deterrence capabilities in defense of our friend and ally, 100%. In the years to come, the Prime Minister and I will be working closely together to maintain peace and security, and I also say peace through strength, and all over the Indo-Pacific. And to that end, we also remain committed to the effort I began in my first term to ensure safety and stability on the Korean Peninsula. Prime Minister Ishiba and I spoke long and hard about a vital economic relationship between our two countries and the continuance of that relationship. The United States and Japan trade over $300 billion in goods and services each year. Japan has invested nearly $800 billion, and that's going to go up very, very substantially in the coming months, more than any other country. And they're going to have some competition. We have a lot of people coming in and investing in the United States. I think the feeling throughout the world has never been stronger about this country. As a result of our victory in 2024, the presidential election, the Japanese investment and technology giant SoftBank announced plans to invest between $100 and $200 billion. And we have many other companies investing that number, higher than that number, some a little bit less, but we have trillions of dollars of investment pouring into our country now that you didn't have just a short while ago. Today, our teams discussed how our two nations can do even more to stay on the cutting edge of artificial intelligence, along with the quantum computing, semiconductors, and other critical technologies. And they're coming out. The problem with technology, that kind, it's obsolete in about 2 days, so we have to start all over again. Doesn't last long. We agreed to cooperate even more closely to combat the Chinese economic aggression, which is quite aggressive. I'm also pleased to announce that Japan will soon begin importing historic new shipments of clean American liquefied natural gas in record numbers. It'll be record numbers. With our Secretary of the Interior, we were talking, I think Doug is here. Hello, Doug. Please stand up, Doug. Doug Burgum, everybody. We're talking about the pipeline in Alaska, which is the closest point of major oil and gas to Japan by far. Less than half the distance of any other location. We're talking about a joint venture of some type between Japan and us, having to do with Alaska oil and gas, and that's very exciting. They're very excited about it, so are we. As we deepen our economic relationship, I made clear that the United States will be conducting trade with all countries based on the principle of fairness and reciprocity. Chronic trade deficits not only undermine our economy, they really do, and we're going to get rid of the trade. We have a trade deficit with Japan of over $100 billion, but we're going to work that out, and I think very quickly, frankly. We can do it just on oil and gas. We can work it out, so we intend to do it very quickly. We both understand that. And as America welcomes new foreign investment, we also want to ensure that companies build their products and factories here in America, not simply buy the assets that we have. And Japan is going to be opening up auto plants. New auto plants are being built currently as we speak. They've just been started. Toyota is one, and Nissan's going to be doing something very exciting about U.S. Steel. They'll be looking at an investment rather than a purchase. We didn't like the idea. U.S. Steel is a very important company to us. It was the greatest company in the world for 15 years, many years ago, 80 years ago. And we didn't want to see that leave, and it wouldn't actually leave, but the concept psychologically not good. So they've agreed to invest heavily in U.S. Steel as opposed to own it, and that sounds very exciting. And we're going to meet with Nissan next week, the head of Nissan, very great company, and they'll work out the details. I'll help. I'll be there to mediate and arbitrate. And I had the privilege of working closely with the great Prime Minister, as you know, and you know him very well, Shinzo Abe, the longest-serving Prime Minister in Japan's history. Likewise, I expect that this Prime Minister is going to be a great one. I really believe that he's going to be a great one. I've gotten to know him for not long, but I can see what they have. He's got the qualities of greatness. He's going to do a fantastic job for Japan and for the Japanese people. And I'd like now to invite the Prime Minister to say a few words, and then we'll take some questions. Mr. Prime Minister, thank you. Thank you very much.
Mr. President Trump, I would like to sincerely thank you for inviting me to the White House today, immediately following your inauguration. I also thank you for your very warm hospitality. I have come to Washington, D.C. with the hope of having a face-to-face meeting and deepening our mutual understanding at this early date with President Trump, who is now leading the United States. the most important country for Japan's diplomacy and security, and aligning our perspectives and visions that Japan and the United States should pursue. What should we do to advance the national interests of both of our countries in synergy and to realize peace and prosperity in the Indo-Pacific? I am convinced that the answer lies in further strengthening the strong and unwavering Japan-US alliance to achieve a free and open Indo-Pacific. President and I concurred to strengthen the deterrence and response capabilities of the alliance and to work closely in addressing strategic challenges that both countries are facing in this region. I conveyed to the President that Japan, as an ally of the United States, is ready to share responsibilities and to play its own role. I also reiterated Japan's unwavering commitment to fundamentally reinforcing its defense capabilities, and we confirmed the unwavering commitment by the United States to the defense of Japan. We reaffirmed that Article 5 of the Japan-US Treaty of Mutual Cooperation and Security applies to the Senkaku Islands, with half of the world's population and approximately 60% of the world's GDP. The Indo-Pacific serves as the engine of growth and vitality for Japan, the United States, and the world. President and I also concurred that the United States and Japan will make further efforts in a wide range of areas, working hand in hand together to realize a free and open Indo-Pacific. In this context, we also concurred to further advance cooperation of the multi-layered networks of the like-minded countries, including the Quad and trilateral cooperation with the Republic of Korea and the Philippines. We also discussed Japan-United States cooperation to bring about growth and prosperity. Economic cooperation, including on economic security, is important from the perspective of strengthening alliance cooperation. Japan is the closest economic partner of the United States and has been the world's largest investor in the United States for 5 consecutive years. Also, with the inauguration of President Trump, the momentum for Japanese companies to invest in the United States is growing even stronger. Today, I conveyed my willingness to cooperate together to elevate Japan's investment in the United States to an unprecedented amount of $1 trillion. President Trump and myself also concurred to elevate the Japan-US partnership to an even higher level through improving business environment and increasing bilateral investment and employment, strengthening each other's industries, leading the world in developing advanced technologies such as AI and leading-edge semiconductors, and strongly promoting efforts to harness the energy of the growing market in the Indo-Pacific region. We also confirmed that we will cooperate to strengthen energy security between the two countries, including increasing exports of United States liquefied natural gas to Japan in a mutually beneficial manner. Regarding foreign exchange, as in the first Trump administration, close discussions will continue between Japanese and the U.S. finance ministers who are experts in this field.
We also held candid discussions on challenges the Indo-Pacific region is facing. We confirmed that we are resolved not to allow unilateral attempts to change the status quo by force or coercion, and to oppose such attempts in the East and South China Seas in order to fully defend a free and open Indo-Pacific. We also reiterated the importance of peace and stability across the Taiwan Strait. Regarding North Korea, we affirmed the need to address its nuclear and missile program, which poses a serious threat to Japan. the U.S., and beyond, and that Japan and the U.S. will work together toward the complete denuclearization of North Korea. As the abductees and their families continue to age, I conveyed my strong sense of urgency and determination directly to President Trump and gained his renewed strong support for the immediate resolution of the abductions issue. While this was my first face-to-face meeting with President Trump, we were able to openly and frankly exchange views, and our meeting turned out to be very productive and meaningful. As a result of today's meeting, which marked a new departure for the Japan-U.S. relations, we are issuing a Japan-U.S. Joint Leader Statement. This document will serve as a compass for further cooperation between our two countries. On the basis of these deliverables, I look forward to working together with President Trump, who I respect immensely, to usher in a new golden age of Japan-U.S. relations. I look forward to welcoming you to Japan, and I am very excited about that prospect. Thank you, Mr. President.
Thank you. Any questions, please? Peter?
President Trump, I have two on Doge. Elon Musk said today, I love Donald Trump as much as takes a great man can love another man. What does the First Lady think about that?
Oh, I think she'll be okay with it somehow.
So, Democratic lawmakers are really upset that Doge engineers have access to these Treasury payments systems. They're saying that these systems are used to disperse trillions of dollars each year and contain everyday Americans' personal information like social security numbers, home addresses, bank accounts. Why does Doge need all of that?
Well, it doesn't, but they get it very easily. I mean, we don't have very good security in our country, and they get it very easily. And what we're doing, if you look at what has just taken place with respect to some of the investments that have been made on another agency that people have been talking about for years, but nobody did anything about it, it's absolutely obscene, dangerous, bad, very costly. I mean, virtually every investment made is a con job. There's nothing of value to anybody unless there's a kickback scheme going on, which is possible. And we're going to be doing more and more of that. We're going to be looking at Department of Education. We're going to be looking at even our military. We're going to be looking at tremendous amounts of money, Peter, being spent on things that bear no relationship to anything and have no value. We're talking about trillions of dollars. It will be, in the end, trillions of dollars being absolutely wasted, and perhaps illegally. I would say certainly in many cases illegally, but perhaps illegally overall. And I'm very proud of the job that this group of young people, generally young people, but very smart people, they're doing. They're doing it at my insistence. It would be a lot easier not to do it, but we have to take some of these things apart to find the corruption. And we found tremendous corruption.
You mentioned the Department of Education. What did you think when you saw Democratic lawmakers trying to get into the Department of Education earlier today?
Oh, I see the same ones. I see Maxine Waters, a lowlife. I see, you know, all these people. They don't love our country. They don't love our country. We want great education. So they rank 40 countries in education. We're ranked dead last, dead last. But the good news is we're number one in one category. You know what that is? Cost per pupil. We spend more per pupil than any other country in the world. You look at Norway, Denmark, Sweden, various countries all up and down, Finland, China does very well in education. And then you look at us, we spend much more money than they do per pupil or any other way, but we spend much more money than they do, and yet we're ranked this year, Biden's last year, congratulations, Joe, we're ranked dead last. So what I want to see is education. Number one, I like choice, and we all like choice. But beyond choice, long beyond choice, I want to see it go back to the states where great states that do so well have no debt. They're operated brilliantly. They'll be as good as Norway or Denmark or Sweden or any of the other highly ranked countries. They'll be You probably have 30, I figure 35 to 38 states will be right at the top, and the rest will come along. They'll have to come along competitively. And by the way, we'll be spending a lot less money, and we'll have great education.
As part of this DOGE cost-cutting effort, one of the DOGE engineers was fired for some inappropriate posts. The vice president says, bring him back. What do you say?
Well, I don't know about the particular thing, but if the vice president said that, did you say that? I'm with the vice president. Thank you, Peter. Yeah, go ahead, please. Yes, red dress.
President, just how strong do you want Japan's military to be? And do you specifically hope that their increased military spending will deter China and North Korea? What did you talk about that today?
Well, I want our military to be the strongest. I also don't mind spending so much money on the military because we build it here. It's made in the USA, all made in the USA. We have, you know, I rebuilt our military during my first term. Did a great job. We left some of it behind in Afghanistan, stupidly. There was no reason for that, but it was still as much as it was. It was billions and billions of dollars, but it was a small part of it. But we're going to have the strongest military by far. We have great people. I want to congratulate Pete Hegseth for having gone through the gauntlet. He went through a lot, but he got through, and he's going to be a tremendous, I have no doubt he's going to be a tremendous leader. And other of the leaders sitting here, they're in their own fields. We're going to do something very, very, very great, and we expect great things. But I expect the strongest military by far in the world, far stronger than China, far stronger than anybody, and that's the way it is. Thank you very much. Would you like to ask a question, please? Go ahead.
Thank you, Mr. President.
Thank you.
This is Hiramoto from Nippon Television. My question, let me ask two quick questions.
Sure.
First, this is the first meeting between Mr. President and Prime Minister Ishiba. So what kind of impression do you have on him? And number two, do you have an idea or do you have a plan to impose tariff against Japan so far? Thank you.
I think that he is going to be a great prime minister. I think he's a very strong man, very, very strong. I have great respect for him. I've known him for a long time through a reputation. Shinzo Abe thought the world of him, and I think he's going to do a fantastic job as prime minister. A very strong person. I wish he wasn't so strong. I wish he was a little bit weaker than that, but that's what I got. I have to get strong guys all the time. He's going to be a great prime minister. I also, in terms of tariffs, I mean, we're going to have tariffs, mostly reciprocal tariffs, where we go with, and I'm going to be probably meeting on that Monday or Tuesday, have an announcement, probably a news conference, but probably reciprocal tariffs where a country pays so much or charges us so much, and we do the same. So very reciprocal, because I think that's the only fair way to do it. That way, nobody's hurt. They charge us, we charge them. It's the same thing. And I seem to be going in that line as opposed to a flat fee tariff. Okay? Yes, go, please. Please, go ahead. Why don't you go ahead?
This is Ota from Yomiuri Shimbun newspaper. I have a question for Prime Minister Ishiba. So this is your very first summit meeting. What was your impression of President Trump? Were you able to build a good relationship of trust and confidence? In Northeast Asia, there are many challenges, China, North Korea, and so forth. And with President Trump, what did you appeal to him, and what kind of understanding were you able to obtain? On the economic field, there is the acquisition of U.S. Steel, the buy Nippon Steel, and there are expansion of import of LNG. What were the communication discussion did you have with President Trump for the $1 trillion of investment from Japan to investment? What was his reaction? What about your communication on tariff front? This is the first time that I met with President Trump in person. So this was the first time meeting face to face. But for many, many years, I have watched him on television. So it was quite I was so excited to see such a celebrity on television to see in person. On television, he is frightening, and he has the very strong personality. But when I met with him, actually, he was very sincere and very powerful and with strong will for the United States as for the whole world. I was able to feel that. This is not the sort of polishing or trying to suck up to him. For the world peace and for the regional stability that both of our countries need to play our role and make our endeavors and responsibility. As for the increase of our defense expenditures, it is not that we are told by the United States to do so. Japan, on our own decision and on our own responsibility, we need to increase our defense expenditures. But of course, we need to communicate and consult with the United States. But the responsibility is with Japan, and the decision is with Japan. Now, on the tariffs, that if it is mutually beneficial, tariffs need to be set. And as for Japan, as Mr. President has introduced to us, an unprecedented investment will be made from Japan to the United States, and so many jobs will be created. So $1 trillion is the target. And this will be to the benefit of the United States, but also to the benefit of Japan as well. Investment is mutually beneficial. So be it with U.S. Steel, as Mr. President says, it is not acquisition, it is investment. So the Japanese technology will be provided, and the better quality products will be manufactured in the United States, and the U.S. Steel will make products which will contribute not only to the United States and Japan, but also to the whole world. It is not one-sided. It will be reciprocal. It will be mutually beneficial. And I believe we were able to share on this, and that is the biggest result that I have seen today.
Thank you very much. Go ahead, please. Yeah.
I wanted to ask you about that U.S. Steel deal. So you're saying that is this a restructuring of the deal that's happening, and then will you approve?
They're doing it as an investment, no longer a purchase.
Okay.
I didn't want it purchased, but investment I love. And they're going to do a big investment, subject to getting the deal done.
And that's
they'll be doing a big.
Where the US,
I'm okay with that, sure.
And for the Prime Minister, what was your argument to the President related to U.S. Steel? And one more on tariffs, Mr. President, if I could. You said on tariffs that you'd like them to be reciprocal, back and forth. What was the reception from the Japanese Prime Minister when you said that, or when you talked about it?
Well, we didn't discuss tariffs too much. We really discussed many other things, including the pipeline in Alaska, which I think is going to be maybe the most exciting thing with Doug and Chris. We discussed that at length, the pipeline. I mean, it seemed to be of great interest to them. It's we have potentially more oil and gas than in Saudi Arabia, just in Alaska. We have the most of any country in the world. It's a big asset for the United States, but we haven't used it. We go to Venezuela, we go to other places to take oil and gas, and we have more than anybody. It's an amazing phenomenon that took place over the last 4 years. Nobody understands it, including the people that were in charge of it. They had no clue what they were doing. So it was a big problem. They were surprised, actually, too. They were saying, why didn't they wouldn't sell them LNG. They wouldn't sell it. Japan wanted to buy LNG, and Biden wouldn't sell it. And I'm trying to figure that one out. Maybe it was the environment. He might answer that question. He's curious about that himself, I think. Thank you very much. If you want to answer that, you may, about LNG, that the United States wouldn't sell you LNG.
That was a really unfortunate thing. But the current administration, the previous administration was not allowing the LNG to be exported to us. I believe that President Trump, on the day of his inauguration, allowed us to resume this importing. I think this is something that is really wonderful for us. And as the country of Japan, we are interested in importing not just LNG, but also bioethanol, ammonia, and other resources at a stable price, a reasonable price from the United States. And we also want to improve the trade deficit that the U.S. has towards Japan. So if we are able to buy those at a stable and reasonable price, I think it would be a wonderful situation. And for that, I am very appreciative to President Trump. And we also look forward to LNG and hope that it's a success.
I want to just say that on the ethanol, Iowa is going to be very happy. All of the Nebraska, all of our farm states are going to be very happy. They want ethanol, and we'll be able to provide it. So our farmers, who I like and they like me, I think they're going to be very, very happy. We've opened the sale of LNG immediately. Actually, we did it a few days ago. And China, right now, not only China, everybody wants to buy it. We have more than anybody, and they're all buying it. But Japan in particular, we're very happy that they're going to start immediately. And we can supply it to the world, but we're supplying it to Japan, and they're going to always be right up in the front of the line. Yeah, go ahead, please. Go ahead.
Mr. Prime Minister, I have a question for you as well, but Mr. President, I'll start with you. Well, quickly to follow up on what Peter was asking, have you directed Elon Musk to review Pentagon spending, given it's the biggest discretionary spending
Yes,
in
I
the
have
federal
Pentagon,
budget?
education, just about everything. We're going to go through everything, just as it was so bad with what we just went through with this horrible situation we just went through, and I guess 97% of the people have been dismissed. It was very, very unfortunate. You're not going to find anything like that, but you're going to find a lot, and I've instructed him to go check out education, to check out the Pentagon, which is the military, and, sadly, you'll find some things that are pretty bad, but I don't think proportionally you're going to see anything like we just saw.
FBI has turned over a list to the Justice Department of the FBI agents who worked on the January 6 rioters cases. Are you planning to fire the FBI agents who worked on those investigations?
No, but I'll fire some of them because some of them were corrupt. I have no doubt about that. I got to know a lot about that business, that world. I got to know a lot about that world, and we had some corrupt agents, and those people are gone, or they will be gone, and it'll be done quickly and very surgically. Did you have a question for the Prime Minister? Talk up. I don't know. I know we have some that are very corrupt and we don't like it. We're going to bring back the reputation of the FBI. Kash Patel is going to do a great job, and we're going to bring back the reputation of the FBI, which has been hurt very badly. It's been devastated over the last 4 years.
You have just been meeting for the first time with President Trump. The last administration famously did not have hardly any, if at all, contact with North Korea. President Trump certainly did the last time he was in office. Would you like to see him resume that contact and also that in-person meeting that he had with the North Korean leader, Kim Jong-un?
That is something that the United States needs to determine on its own, and it's not something that we should request. Having said that, but for example, in Vietnam or Singapore, the President of the United States, President Trump was able to meet with Kim Jong-un. I think that's a very positive development. So now that President Trump is in power again, if we are able to move towards resolving issues with the North Korea, I think it would be great. And of course, for us, that includes not only denuclearization, but also resolving the And so not only the victims of the abductees, but also their families too are aging, and so our time is limited. So if the President of the United States, if President Trump is able to resolve this issue, we do understand that it's a Japan issue first and foremost. Having said that, we would love to continue to cooperate with them.
It's actually a good question, and we will have relations with North Korea and with Kim Jong-un. I got along with him very well, as you know. I think I stopped the war. I think if I wouldn't have won that particular election, you would have ended up in a very bad situation. But I did, and we had a good relationship, and I think it's a very big asset for everybody that I do get along with him. I get along with him, he gets along with me, and that's a good thing, not a bad thing. And I can tell you that Japan likes the idea because their relationship is not very good with him. And if I can have a relationship with not only him, but other people throughout the world where there seem to be difficulties, I think that's a tremendous asset for the world, not just the United States. Go ahead.
I have a question for you and for the Prime Minister as well. Mr. President, I wonder what you make of the criticism from Democrats that these staff reductions, the cuts that Elon Musk and Doge are doing are an unlawful power grab. Is there anything you've told Elon Musk he cannot touch?
Well, we haven't discussed that much. I'll tell him to go here, go there. He does it. He's got a very capable group of people. Very capable. They know what they're doing. They'll ask questions, and they'll see immediately as somebody gets tongue-tied that they're either crooked or don't know what they're doing. We have very smart people going in. So I've instructed him, go into education, go into military, go into other things as we go along. And they're finding massive amounts of fraud, abuse, waste, all of these things. So, but I will pick out a target and I say go in. There could be areas that we won't, but I think everything's fertile. You know, we're a government. We have to be open. And as an open government, I don't know, I guess you could say maybe some high intelligence or something. And I'll do that myself if I have to. But generally speaking, I'll just say go. But he will be looking at education pretty quickly, and he will be looking at military too.
You know, the bulk of federal spending is Social Security, Medicare, programs like that. Would you like to see him look at those programs as well?
Well, they don't really have to be looked at by him. They can be looked at by us. Social Security will not be touched. It'll only be strengthened. We have illegal immigrants on Social Security, and we're going to find out who they are and take them out. We have illegal immigrants in other Medicare. We found a lot of bad people, a lot of people that shouldn't be on, that were put on through California. A lot of them come out of California. We're not going to stand for that. So we're going to strengthen our Social Security, et cetera. We're not going to touch it other than to make it stronger. But we have people that shouldn't be on, and those people we have to weed out. Most of them, or many of them so far, have been illegal immigrants. They shouldn't even be in the country. Do you have a question for the Prime Minister?
I do. Mr. Prime Minister, the President's affinity for tariffs is well known. If the U.S. places tariffs on Japanese imports, would Japan retaliate?
I am unable to respond to a theoretical question. That's the official answer that we have.
That's a very good answer. Very good answer. Wow. That's very good. He knows what he's doing. Thank you very much, everybody. Thank you.
All right, everybody, you have been listening to President Donald Trump. There, of course, with the Prime Minister of Japan, Shigeru Ishiba. They're at the White House. They have been holding meetings throughout the day, talking about a variety of topics between the new nations. On the subject of tariffs between the two allies, if you will, President Trump saying they didn't actually discuss that too much with the Prime Minister, although the Prime Minister, just taking a question from the reporters in the room, asked about if the U.S. imposed tariffs on Japan, would Japan impose them on the United States, and kind of saying, I declined to answer, basically.
Also, making some news about that Nippon-U.S. Steel deal. President Trump says that the Japanese company has, quote, agreed to invest heavily in U.S. steel as opposed to own it. So it's going to be done as an investment, Carol, no longer a purchase, at least according to the president, just in the last half hour. That was some big news.
Yeah, absolutely. And about the relationship between the two, the prime minister saying that the U.S. is the most important country for Japan's diplomacy and willing to elevate Japan's investment into the United States to $1 trillion. And again, also the President Trump, they're taking some questions about the initiatives of the Doge Group and Elon Musk he's going after education, Pentagon, and there could be some other areas in the government. All right, folks, that's going to do it for this hour of Bloomberg Business Week. Coming up on TV, The Close. Tim and I continue on Business Week. This is Bloomberg Radio.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Michael Wallace. President Trump is holding a joint news conference with Japanese Prime Minister Shigeru Ishiba at the White House. Trump announced Japan's Nippon Steel will drop its $14 billion bid to buy U.S. steel.
They're doing it as an investment, no longer a purchase.
Okay.
I didn't want it purchased, but investment I love. And they're going to do a big investment, subject to getting the deal done.
And that's
they'll be doing a big.
Where the US
I'm okay with that, sure.
The two leaders also agreed to counter Chinese economic aggression. There's a court hearing this hour on the challenge two unions have filed against the Trump administration's effort to dismantle USAID. CBS's Natalie Brand is at the White House.
President Trump alleged on social media that the agency has corruption at levels rarely seen before, saying, quote, close it down. Thursday, Secretary of State Marco Rubio, the acting administrator of USAID, took a more measured tone, saying the U.S. will continue to provide foreign aid, but in a way that furthers the interests of the United States.
If you don't have the flu, you probably know someone who does. The CDC says this year's flu season is the worst in 15 years. 12-year-old Alexandra Cantor of Ardsley, New York, is suffering from it.
I think I caught the flu from a recent gymnastics competition because we were touching a lot of the same things.
From human flu to bird flu, Governor Kathy Hochul has ordered the closing of live poultry markets in the New York City area after bird flu was detected at some of them. CBS's Lilia Luciano in Queens says it's tough timing just ahead of the Super Bowl.
Chicken wings are a big part of it. It's extremely low, the risk of getting the bird flu from consuming chicken or eggs, and they're only focusing on these live markets.
It's getting more crowded in New Orleans.
Fans from near and far have converged on the Crescent City for the Super Bowl, and they've noticed the security enhancements put in place ahead of the game.
Definitely the heightened security makes me feel better.
Probably the biggest weekend here other than Mardi Gras, so if there's any time to have heightened security, it's probably this weekend.
Thousands of people are filling the French Quarter for parties and other events held in conjunction with the championship match, while thousands more are taking part in the NFL experience at the Montreal Convention Center. While some fans are rooting for their hometown teams, a few others are picking sides based on rivalries and love affairs.
Buffalo's not here, so I don't want KC to win.
I knew Travis Kelce before I got here because he's with Taylor Swift.
Ian Ozan for CBS News, New Orleans.
The jobs report for January was lackluster. The economy created 143,000 jobs, fewer than expected. Chris Heisey is the chief investment officer for Merrill and Bank of America.
Some of the service industries were a little weaker, where some of the manufacturing indices that have gone into expansion territory, that was the area that showed a little bit of growth.
The unemployment rate fell from 4.1 to 4%. This is CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everyone. We are 55 minutes away from the closing bell on this Friday, getting ready to wrap up the day and the week overall. We are Bloomberg Business Week in our Bloomberg Interactive Broker studio on YouTube, where else are we?
Bloomberg Originals. We're everywhere, Carol Master. We're here in New York City right now. If you want to stop by and say hi or find us on the Bloomberg, you can send us an IB. Hey, we got a lot coming up
only Friday,
over the next couple of hours.
We do indeed.
A lot of stocks making big moves. Amazon, Uber, Doximity. We've got the details, and we've got you covered.
Yeah, also between taxes, tariffs, and international deals, there's a lot coming from Washington. We're going to wrap up some of the highlights if you need or what you need to know out of that press conference that we just heard from President Trump and the Prime Minister of Japan.
And our 4 p.m. hour is dedicated to Sunday's big game. We've got you covered with an interview with Kansas City Chiefs President Mark Donovan and the Patriots CEO Robert Kraft.
All in on the big game.
Pats are not in the Super Bowl.
That's okay.
Okay.
I'm sure he's still interested.
Yeah.
I'm sure he'll be there. All right, let's get a check on the trade and look at your top business stories. Over to Charlie Pellet.
Hi, thank you very much. And here's what's going on. 54 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ, all lower right now. Worst level of the day on the S&P, down 56, 6,027 where we stand. That is a drop of 0.9%. The Dow also down by 1%. NASDAQ down 1.4%. The Russell 2000 index down 1.2%. Jobs Friday, the 10-year, 4.48%. Also, we got consumer confidence data this morning from the University of Michigan, the 2-year, 4.27%. Gold up $7 the ounce, up 0.2%. And West Texas Intermediate crude up by 0.5%, $70.96 a barrel. Recapping stocks lower, S&P down 56, down 0.9. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we just heard from President Donald Trump along with Japanese Prime Minister Shigeru Ishiba at a press conference at the White House. The two have been holding meetings today. At that event, they talked tariffs, they talked North Korea, they talked the U.S. Steel, Nippon deal. They talked about a lot of it. And so we kind of want to get to kind of the key points that we think the Bloomberg investor or the investor in general needs to know about.
We were watching it. You guys were watching and listening to it. So too was Mike Shepard. He's Bloomberg News Senior Editor for Technology and Strategic Industries. He joins us in our Bloomberg News Washington, D.C. bureau. Michael Shepard, what was the big news, in your view, that was made in the press conference?
Well, you know, Tim, one of the biggest things we were watching for heading into this meeting between Prime Minister Shigeru Ishiba and Donald Trump was what would become of the U.S. Steel, Nippon Steel deal. It was blocked shortly before President Joe Biden left office. President Donald Trump really signaled no desire to reverse that decision. He was also opposed to Nippon Steel taking over this Pittsburgh-based American industrial icon. And this morning he reiterated that skepticism of the deal. The Prime Minister was expected to try to make one last-ditch case for it. And from the news conference, it appears that an outright purchase has fallen short. But Donald Trump was able to secure an agreement from perhaps Nippon Steel to invest significantly in U.S. Steel, perhaps providing a much-needed capital injection into the company. But again, the details are very short. We don't know how much money that would be, how soon it would be, what it would go to, et cetera. So like a lot of things that we also heard at the news conference, we are waiting on a few more details.
That's what's so interesting to me, because when a company or an individual makes an investment, they get a return for that investment. They get something in return. Typically, it's ownership. We don't know how much ownership or if any ownership Nippon Steel would get of U.S. Steel, right?
Well, that's right. And I think the question would be is, you know, if they are, you know, really in a lot of ways is a question of control. If they acquire, say, a certain percentage stake, that would, you know, help provide some of that capital that U.S. Steel may need to modernize and to invest in some of its plants. But, you know, what threshold would that reach? And certainly the last thing that President Donald Trump wants to see is a change of control in which U.S. Steel would then be truly taken over by Nippon Steel. So we'll have to watch for, like, how much they acquire and what form this investment will take.
Just want to point out that shares of U.S. Steel, which have been up about 8% in the past 3 days. Right now is down about 6% in the session. Certainly seeing some pressure following that press conference. Yes, we'll have to see where it goes. I am curious about, a lot was said about reciprocal tariffs, and this is the thing that is certainly continues, Michael, as you know, to put investors on edge and weigh on the equity trade. What new, if anything, did we get from the president? Or what might be coming next week?
Yeah, we did get a little sense of timing. And Carol, you're right. Wall Street has been watching the tariff question very closely, hoping that Donald Trump would not go as far as he had promised during the election campaign. He had pledged to impose tariffs, for example, of up to 60% on additional tariffs of up to 60% on Chinese goods. Other tariff threats that we have seen more recently waved against Canada and Mexico, and the 10% tariffs that he just imposed on Chinese goods in the last several days. So this is an open question. Now, reciprocal tariffs, the president is looking for equal treatment of U.S. goods. And in short, that means that if another country imposes levies on U.S. products, well, the U.S. would in turn hit goods coming from that country. And in particular, he is thinking about the European Union and its value-added tax. Again, he didn't provide very many details, but he did signal that his team would be meeting Monday to talk about it and perhaps announcing it a little bit later in the week. Although, again, the timing was vague and the details, again, we are looking to find out more. We may be learning first thing the coming week the types of goods and the locations that would be affected.
All right, going to leave it there. Hey, listen, Michael, thank you so much. Appreciate the quick analysis coming off of that press event. Michael Shepard, he's Bloomberg News Senior Editor for Technology and Strategic Industries out there in our D.C. bureau. Tim.
It's easy when you're not a Mag 7 stock to get lost in the shuffle during earnings season, Carol.
It's really, I almost feel for other companies.
It's why we wanted to highlight one name that reported, and its shares are absolutely soaring in today's trade as a result. We're talking about Doximity. Shares soaring, rising as much as 38% in today's session. Right now, it's up about 36%. This after the healthcare software company posted third quarter results that beat expectations, also raised its full year forecast. The stock is up nearly 40% today. Shares are up close to 50% this year. Still down, though, around 20% from its 2021 highs. We've got back with us Anna Bryson, CFO over at Doximity. She joins us from San Francisco. Anna, I'm curious about not just the expectation beat, but the raising of the full year forecast. What prompted you to raise the forecast?
Yeah, thanks so much for having me. We absolutely had a strong overall quarter, as you mentioned, and continue to run a very profitable business. We actually had our first ever quarter of north of 60% EBITDA margins. As far as where that's coming from and where the upside's coming from, a big driver of our growth is that the network engagement at Doximity continues to hit record highs. So we're seeing our physician members really lean into digital, especially on the AI and telemedicine side, to be more productive and provide better care for their patients. I think we're really becoming a Bloomberg for medicine, if you will, and our physicians are using us on a day-to-day basis to conduct care.
How are the snacks at the office? How are the office snacks? Because if you want to be Bloomberg for something, you got to have good office snacks.
And gorgeous offices. I'm just going to put it out
snacks. Hey, we're in San Francisco.
Okay.
We've got pretty good office snacks in our
good.
HQ.
Hey, Anna, I think it's safe to say that if you're not a doctor or a medical professional, and if you're not maybe somebody who is maybe buying and selling different types of stocks and investing, you might be like, I have no idea what Doximity does. Help me understand the business and the business model. Just remind our world what it is.
Absolutely. We're a digital platform for doctors. We have over 80% of U.S. physicians as registered members on our platform. We do everything from keeping doctors up to date on relevant medical information in our newsfeed. We have a network of physicians, so doctors can use it kind of in a LinkedIn capacity. And then we also have our workflow tools, which is what's been growing the fastest for us. So that's telemedicine, on-call scheduling, Doximity GPT, which is our AI prompt. And physicians are using it on a daily basis. You know, our engagement, as I mentioned before, continues to reach record highs. And we're able to monetize that via health system and pharmaceutical customers who are looking to reach these physicians and help them with their clinical workflows.
So revenue comes from charging these physicians or people who advertise on the platform?
Free to doctors.
You're free to doctors. So remind us, how do you make money?
Yeah, we primarily, our two biggest customers are health systems and pharmaceutical manufacturers. Health systems will use us to recruit physicians. They'll purchase our telehealth offerings. They will buy products that could exist in the newsfeed so that they can get referrals. There's a variety of ways in which we're able to monetize the platform. And we're showing that between the record engagement and the ROI our customers are seeing on the platform, several continuous quarters of raises to our annual outlook.
On the question of Doximity GPT, the AI tool that you offer, how do you ensure that it provides doctors, medical professionals with accurate information?
Yeah, that's incredibly important to us. I mean, we take our entire platform is HIPAA secured, and it's a closed ecosystem. As far as Doximity GPT, it is HIPAA compliant. We have built it on top of OpenAI, but we are constantly training it. We've got an entire team focused on it. This module for these physicians help doctors write, it helps them edit, it helps them send a range of documentation. And I think one of the craziest facts I heard maybe about a year ago is that research shows that for every hour of direct patient care, physicians spend nearly 2 hours on admin work. So we are focusing on eliminating that admin burden and helping physicians just be way more productive. And I think there's a lot of use cases for AI there.
All right, we got to run. Hey, listen, Anna, great to check in with you once again. Anna Bryson, she's the CFO over at Doximity, joining us there in San Francisco. Shares of Doximity are up about 36% on this Friday.
Hey, it is Friday, so we're heading into the weekend, Carol Master. Looking back on the week that was, when it comes to Washington and everything out, a lot of fast-moving news, a lot coming at investors, including the latest on tariffs and the U.S. steel and Nippon steel deal.
All right, we got to stay with our team in Washington who are just working nonstop. Nathan Dean is Senior Policy Analyst over at Bloomberg Intelligence. He joins us from our Washington, D.C. Bureau. I'm not even quite sure where, Nathan,
Let's go taxes. Let's go taxes.
Let's talk taxes, because it's kind of something near and dear to me. I'm watching what's happening with the state and local taxes, the SALT taxes, if you will. What do we know briefly on that?
Yeah, so yesterday President Trump met with a lot of Republican lawmakers to try and figure out what are the pieces to this reconciliation puzzle, and SALT deduction was part of that. President Trump told the Republican lawmakers that he wanted to see some form of SALT relief. Now, this goes actually back to, prior meetings that he's had, what people are calling the Salty Caucus, if you will, Republican lawmakers from the New York City area. And right now, the cap, I think, for most New Yorkers know that the cap is around 10,000. The Salty Caucus wants to have that go to 100,000. President Trump has floated maybe 20,000. We don't know where that number is going to be, but we are going to anticipate that there's going to be some form of SALT relief. The challenge is, for every amount of dollars that you're going to give in terms of SALT relief is another dollars that the Republicans are going to have to try and figure out how to pay for. So, we don't know where it's going to eventually turn up, but, it certainly should be better than the $10,000 cap that it is today.
Oh, music to Carol's ears, if I may say so myself.
Yeah.
Hey, I also, in terms of taxes, there's a lot coming when it comes to carried interest. That was not something I expected to see. The president wants to get rid of this tax loophole that venture capitalists and private equity managers absolutely love. Can he pull it off, in your view?
Yeah, so this is something he actually tried in his first term. He actually vowed that he would do away with it, and obviously the carried interest loophole is still here. Now, Senator Tammy Baldwin, a Democrat, actually put out a bill, ironically, on the same day that President Trump said that he would call for the carried interest provision to be away. That's great for the president to say this. However, there is going to be a roadblock for the president, and that is in the way of Senator John Thune, the majority leader. He's actually a defender of this, and back in the early debate in 2022, when they were trying to do away with this under the Biden administration, Senator Thune teamed up with then Senator Sinema from Arizona to actually fight off any attacks to do away with this carried interest loophole. So the carried interest loophole doesn't bring all that much money into the U.S. government. So doing it away doesn't help you all that much trying to get that $4.6 trillion pay price for extending these tax cuts. So I think as of right now, if you're listening to this in your private equity, I would say that there's more likely a chance the private equity loophole remains.
It also doesn't help me in the sense of giving me any tax break, Carol Master, because I'm not in private equity or venture capital.
Not yet. No, it is interesting. I mean, Nathan, should we just assume that everything that the president wants to do in terms of tax policy will get through Congress, or not necessarily?
Not necessarily, because the big problem is going to be the House. The House right now is 220 to 215, and Speaker Mike Johnson can only afford to lose 5 votes. So for President Trump, if he were to get his goal, say no taxes on tips, for example, you're going to substantially add to the deficit if you can't make that budget neutral. And if you can't figure out how you're going to pay for it, and you say economic growth is going to pay for it, you most likely will add to the deficit. Well, there's 30 or so Republicans that are never going to vote for a bill that would add to the deficit. You don't do anything on SALT relief, you're going to lose 12 Republicans right then and there. So this is the challenge is, and this is why we're telling our clients that for all this tax debate, it's going to probably go through the rest of this year. I mean, it wouldn't be surprised if you and I had this conversation in October, because there is nothing here forcing Congress to actually do something except for the end of the year when the tax rates for individuals expires and it goes up. That's the date in which it will actually force Congress to do something.
We got 20 seconds left ahead of the Super Bowl this weekend. Eliminate tax breaks for billionaire sports team owners?
Yeah, so this is something that came out of left field. I think President Trump certainly has been, this actually was floated a couple of years ago by a couple of members in Congress, but I'm not exactly sure this is going to get anywhere. Again, it's not going to bring all that much money. It really depends to the lobbyists and who's driving that conversation on Capitol Hill.
Should make for some interesting conversations, though, at the big game, no doubt about it. Nathan, thank you so much. Really appreciate the update on all of that. Nathan Dean is Senior Policy Analyst at Bloomberg Intelligence, joining us once again from our Washington, D.C. bureau.
Hey, we got less than 40 minutes to go to the close of trading on this Friday afternoon, and we got red across the screen. For an update, let's head on over to Charlie Pellet for a business flash. Hey, Charlie.
Thank you very much. Here's what's going on track for another losing week for the U.S. equity market. Right now on the week, down by about